Bună dimineața și vă mulțumim foarte mult pentru participarea la conferința anuală a Ropea, Asociația de Private Equity din România. Evenimentul se va desfășura în întregime în limba engleză, așa că voi face switch-ul către limba engleză. Good morning everyone, thank you very much for attending the annual Ropea conference. We have gathered today over 100 guests which interact with our industry, from investors, entrepreneurs, advisors, and fund managers. Our industry is at a significant turning point, and we are here today to explore with key players in our industry what has determined this evolution, how can we further mobilize capital for the growth of our industry, and eventually for growing the entrepreneurial businesses. We have prepared a packed agenda. You can see a snapshot of the agenda on the back of your badge. And we will start with Mr. Andrei Gemeneanu, the president of, the chairman of the Association of Ropea, based on the recent mandate. And we'll further on continue with three keynote speakers, Mr. Uli Grabenwarter, the Director of Equity in European Investment Fund, Mrs. Gabriela Horga, Member of the Senate, and Mr. Alin Andriaș, State Secretary in the Ministry of Finance, followed by two short presentations, one related to an overview of evolution of our industry presented by Deloitte, and one related to another industry research prepared together with our partner Level 20. Afterwards, we will dive into technical topics. We will have three panels focused on investors, fund managers, and pension funds investments. And meanwhile, in between the panels, we will also have a fireside chat between two experienced industry professionals. We hope that you will enjoy our event. We thank our sponsors. The gold sponsors were Corporate Intelligence Agency, Mid Europa, and PwC Romania, whereas the silver ones were Act Legal Romania, Amrop, Biriș Goran, DataSite, Deloitte, Forvis Mazars, Popovici Nițu Stoica și Asociații, REF și Asociații, and RTPR. We thank our partners in organizing the conference, European Investment Fund and Level 20, and we also like to thank our media partners, Ziarul Financiar. As you have noticed, our conference is recorded and actually transmitted live on Zefe Live, so we are reaching out to many more other potential interested parties. And we would also like to thank our PR agency, Free Communication. So without further ado, I would like to ask Mr. Andrei Gemeneanu, also managing partner in Morphosis Capital, the chairman of Ropea, to deliver the introductory speech.
Too many titles, I would say, but that's okay. Listen, my team have given me a speech, but I've never been good at following the script, neither metaphorically speaking and nor kind of literally. I have to say I feel slightly overwhelmed standing in front of you today, because it is precisely 10 years ago to the month, in May 2015, that I came back to Romania after 15 years abroad. Really with the vision or with the dream, but like most people with the dream, probably lacking the plan, to build a private equity business. So to stand here in front of you 10 years later is a phenomenal honor, and I will do everything in my power in this capacity of chairing Ropea to continue to promote the industry, to foster its development, and to try to bring together all of the relevant stakeholders. Before going further, I just want to do something that I know I will create, not an enemy, but a little bit, I will be scolded for it. I want to honor somebody who stood at this podium for many years Mr. Horia Manda. He is really a humble and understated man, but his achievements are significant. I just want to say that I know he started private equity in the mid-90s with the Romanian American Entrepreneurship Fund, RAF, Enterprise Fund, RAF. And he has been the president of Ropea for 8 years. And he has contributed significantly to the ecosystem. And before going any further, I would like us all to give a round of applause to Horia and to thank him. When I look at the room today, I see a very powerful room. I think this is a room that really, if we set our mind on something, I think there is very little we cannot achieve. I salute the presence of the Romanian authorities, representatives of the Senate, representatives of the Romanian government, representatives of other government institutions and agencies. I salute the presence of the DFIs, really the bedrock of our industry in Romania and arguably in our region. I salute the presence of some representatives of the pension funds. I want to tell them that they are not guests, they are our future partners. That's how we look at it in Ropea. And of course, I salute the presence of all of us, the fund managers, consultants, advisors, people that we work with and get deals and transactions happen. It's really a powerful gathering, and I was just sitting there before coming on stage realizing that our rooms are getting bigger and bigger, which I think is in itself a positive indicator. Also for today, I want to salute in particular the fact that we have done more to reach out into the region, bringing success stories in private equity and more broadly in developing the entrepreneurial ecosystem. We have with us Jacek from Enterprise Investors, who will share the journey of probably the most successful private equity firm in our region. We will also have Cristian from Allianz Pension Croatia and Igor Cicak from Provectus Capital. They will talk about Croatia as a success story in its ability to create a more robust ecosystem of capital, driving our industry forward. Now, the title of today's event, it's Mobilizing Capital for Growth. And for me, that's not just a title or a slogan, it's really a call to action. Because I think Romania as a country and as a market, we are certainly not short of bold entrepreneurs. We are certainly not short of vision. We are certainly not short of talent. I think we need to mobilize ourselves and act in a more decisive manner to create stronger access to institutional capital. So I think that's really the rallying cry of our industry locally to come together and achieve that. It has to be said, private equity has not been a niche industry internationally for a very long time. If we look globally, private equity assets under management are to the tune of $6 trillion, over $1 trillion of this in Europe, a very significant, depending on how you calculate the numbers, between 5 to 8% of the global GDP. And this is really supported by a very strong ecosystem of institutional capital. If we look here in Romania, I would dare say that also here, private equity is no longer a niche. I think the mindset that I have and the mindset with which I took on the role as chairman of the Romanian Private Equity and Venture Capital Association is the thought that private equity fosters entrepreneurship and entrepreneurship fosters progress. And that's really what our industry does. In fact, if you allow me a small piece of history, the very first private equity and venture capital fund, probably depends how you want to classify it, started in 1946 in the United States, when the policymakers in post-World War II America decided to create a government-sponsored initiative called American R&D, Research and Development Corporation, really with the mission of fostering innovation, fostering economic development, and reigniting growth in the economy. Here in Romania, from a Ropea perspective, we have made significant progress. Our association today has 26 fund managers as full members, has 40 affiliate members, has grown significantly. The total capital raised over time by the 26 members of Ropea is 18 billion euros. That's a very, very significant amount. In Romania, according to a Roland Berger study, we have 80 to 90 private equity-backed companies with a combined revenue of 2.5 billion euros. Between 2019 and 2023, private equity-backed companies have created over 4,000 new jobs in Romania. So I think we have plenty of evidence that private equity is a force for good, and we should feel proud to be part of the industry and to continue its development. I said that mobilizing capital for growth is a call to action, so I would really like to end with a call to action to all of us, to the LPs and investors in the room, to take a deeper look at our asset class, at its performance, at its impact, and to embrace it as part of driving superior returns in whatever portfolios they are managing. To the authorities, to really come together and build together a transparent, competitive, and fair environment that fosters competitiveness and allows the industry to develop and to move forward. And to all of us and the teams that support us, as I said, lawyers, consultants, transaction professionals, to really be bold, just the way we are bold in setting a vision for the companies we invest in. I think we need to be equally bold in the way we manage our own investment firms, taking them overseas, making them venture out in new markets, becoming leaders at a CE level, and really taking the success story of Romania abroad. I would be honored, together with the newly elected Ropea board, to support and try to foster this journey. Thank you very much.
We will start our keynote speeches with a speech delivered by Mr. Uli Grabenwarter, who will connect via online from Luxembourg office. He is Director of Equity in European Investment Fund, the largest fund of funds platform investing in private equity and venture capital in Europe.
In a region that actually has undergone a very significant transformation over the last couple of decades, and today is one of the technology and innovation hubs that we observe emerging in the Central Eastern European region. You're debating today the perspective of mobilizing capital for growth. And when I reflect on this topic in different events that support this industry, I typically would go for making the case for the attractiveness from an investment perspective for this asset class. I would refer to the massive progress that we've made in Europe over the last 2 decades in creating a risk-return profile for the private equity and venture capital industry in Europe that is at par with the leading economies in the world. And yet, I'm going to choose a different approach today. And I'm not going to talk about returns. And the reason why I'm going this way and not talk about returns to make the case for mobilizing capital for growth and innovation in a European context is because we are no longer in a situation where returns are the most important reason for us to invest in growth and innovation. The reason why we are investing in growth and innovation today with private capital is because the opportunity cost of not having investments in innovation and growth in an economy like Europe has become much bigger than any marginal difference that we possibly may achieve in doing asset allocation between different asset classes in the financial spectrum. What opportunity cost am I talking about? Imagine the loss of leadership in technology and its consequences for our competitiveness. We know that the gap in productivity between the leading economies in this world, between the US and Europe in particular, but increasingly also between the Asian markets and Europe, this gap has widened significantly over the past. And it is not because we are in Europe less smart or more lazy or more self-complacent. It is because we are incapable of mobilizing and unleashing the innovation and the economic growth that is linked to innovation in a European context. Think also about the opportunity cost of losing our resilience in core strategic industries that we need to secure. We all look back at what happened 5 years ago when COVID actually hit humankind on a global level. And we all know when we have been queuing for getting the vaccines in order to immunize ourselves in that very situation. But if we look at that situation, isn't it weird that what eventually brought the cure or the prevention against this COVID virus was actually technology developed within Europe? And still, we ended up in a situation where we had to queue in front of suppliers of these technologies transformed into vaccines in order to get our share, in order to get our protection for the population of the European continent. That is something that is intrinsically linked to our inability to secure capital for growing to their global leadership in a European context. Think also about the opportunity cost that we are facing if we are losing the edge in securing sustainability from an environmental perspective for our economy. We have the energy transition to face. We have to manage water resources in a totally different manner in the future. We have to protect our natural resources at large, and all this will require innovation in order to achieve this very goal. And finally, think of the loss of technology leadership in areas of security and defense, which for very sad reasons have become a main topic on the European continent as we've got a war at the borders of the European Union. So the question is, can we as a European society, can we afford foregoing the impact of technology and innovation? Can we afford the opportunity cost of not investing in innovation and growth? And the simple answer is, we cannot. We cannot because think of it from the perspective of institutional investors, pension funds, insurance companies, who actually live from the returns that they generate on assets under management. What assets under management will there be in the future if our economies actually lose touch with the leading economies in the world and become, on a competitive level, unsustainable? Or think of it from the perspective of the challenges that we have to face in sustainability and climate and environmental protection and climate change at large. How are we going to manage those challenges without innovation in that area? Again, think of it from the perspective of a business model of an insurance company. How are you going to ensure any of the business units, any of the individuals in Europe, any of your constituencies against natural disaster risks, if the likelihood of materializing this very risk that you're insuring is of 100%? Are you going to ask as insurance premium the deposit of the damage that you're going to pay? It is not going to work. We also have to ask ourselves how we are going to retain talent that is the fuel for our progress in economic terms. How we are going to retain this talent in Europe if we cannot offer the perspective to entrepreneurs of growing their ideas to market-leading initiatives and projects at a global scale. And finally, how are we going to sustain our welfare state system if it is dependent on declining economies that are asking for more support from public funding rather than fueling the public funding through tax payment streams? The reality is that we are all stakeholders of growth and innovation. And the question is, how are we living up to this responsibility as being stakeholders of those vital factors for economic growth? And we can look at it from whatever component of this stakeholder spectrum, how we are going to deal with this responsibility. Of course, as institutional investors, we can ask ourselves the question, in my asset allocation, can I afford the asset class private equity and venture capital? And yes, there is the one or the other percentage point to be gained in terms of returns if we allocate from one asset class to the other. But the question that we should ask ourselves today is no longer whether we can afford the asset class, it is rather whether we can afford not having the asset class of private equity and venture capital if we project our business models in the future. Then, from a government perspective, the debate on what support should be given to innovation in an economy is always hugely debated. Now, we know that we are facing multiple challenges that require public funding over the last decade. We've got the energy transition, we've got the measures against inflation that has been going out of control. We have got the question of security and defense that has come up to the priority list in the recent years. And in all this spectrum of challenges that we are facing, we need to ask ourselves the question, how are we going to allocate public resources to deal with all those challenges? But I think it is utterly important that we make a differentiation in public finances between public expenditure and public investment. Public expenditure is indeed something that is a burden to future generations. It's something that is a debt that we take at the expense of future generations that need to be paid back one day. And it is actually a weight that we are putting on the generations of our kids and thereafter. However, public investment is supposed to achieve the opposite. It is supposed to create value that actually future generations can draw from. It is supposed to build competitiveness that will secure the income streams of our economy in the future. Look at it also from the perspective of the fund managers community. We can look at it mobilizing capital for growth from the perspective of the industry and become ambitious about how much money we get under management for this industry in order to fund whatever investment strategies we are looking for. But I think as a fund manager community, we've got also a responsibility that goes beyond. It is fund managers out there in the market that need to look for the cutting edge, for the innovation in the investment strategies that they are putting forward, because that will drive the spectrum of innovation that is made possible at the level of the portfolio companies that they're going to invest in. And then we have got the stakeholders of the entrepreneurs that actually are what we really should be after, because they are securing genuinely the progress that secures our future. And as entrepreneurs, we need to look at the business models in a different perspective. We need to look at value creation rather than merely profit generation, because the reality is that the value of a company in the future will be equal to the value of the solutions that business models bring to the challenges that we are facing as a society. And that is where the creativity of the entrepreneurs is called upon today. And finally, we have the stakeholder community of us all in how we interact as consumers, as citizens, with the economic tissue that we are building around innovation and growth. We need to get used to that in the future. We will not be able to pay only for the cost of a product and a kind of sound profit margin that keeps a company alive. We will have to get used to the concept that we will need to pay for the value that a societal solution brought forward by an entrepreneurial business model is actually bringing to us. And that is a kind of different concept of revenue streams that will emerge in our economies that we will have to integrate in our thinking. So, as we come together in this forum, I think we are called upon to rethink from scratch the economic model that we are going to carry into the future and that is going to carry us into the future. Competitive leadership is not about reproducing what happened in the past. It is not about running behind a leading economy like the US or Asia. Competitive leadership is about thinking ahead. It is about pioneering new ideas, pioneering new business models, pioneering new ways of integrating externalities in our economic system. And it is not about copying what others have tried and what may have worked in the past. As we come together in this forum of this conference today, I wish you fruitful discussions for reflecting on those challenges that we are facing, not only as an industry, not only as an entrepreneur in an isolated company, but that we are facing as a society at large. I wish you a fruitful conference.
We thank Mr. Uli Grabenwarter for addressing us, and hopefully in the next events we will have the chance to have him close to us in person. Next, we will invite Mrs. Gabriela Horga, member of the Romanian Senate, President of the Commission for Budget, Finances, Banking Activities and Capital Markets, also former Vice President of the Romanian Financial Supervisory Authority, to address a few words, ideas. Thank
you. Good morning. Thank you for inviting me. I'm very pleased to be here today at this conference that you organized. It's not the first event I had with Ropea, and it's very nice and important for us to discuss this essential topic, attracting capital markets to support economic growth. This conference brings together dedicated professionals at this crucial moment for our economy, not only in terms of investment in Romania, but also in terms of budgetary policies and new measures that have to be taken in order to protect our economy. We all want, either if we are legislators, regulators, or professionals, we all want that the Romanian economy to grow steadily, to grow healthily, innovate, and also compete globally. And for that, we cannot ignore the essential role that capital markets have, and especially investment funds. At the heart of this modern construction should also be pension funds and also insurance companies. And these are huge capital engines that can diversify and can support the real economy. Today in Europe, 90% of the capital raised by investment funds come from pension funds. In Romania, the percentage is insignificant, and we have to accept that, and we have to do something about that. And in my roles, I tried to increase the importance of this subject, to make real legislative changes, and I hope to continue this path together with you in the future. And yet, Pillar 2 has assets of more than 30 billion now, with our support, because we increased the percentage over time that is given to Pillar 2. Progress was made recently in this area of investment for Pillar 3. A sufficient increase in allocation with risk management and protection of the fund participants would generate a significant multiplier effect in the economy, and it will mean capital for Romanian companies. It is important for pension funds to broaden their horizons, to open up more for investments in private equity and venture capital. Why? Because this type of investment do not mean only returns, and the previous speaker also mentioned that. We don't look only at the return. This means diversification, means multiplier effect in the economy, and we are talking also about better governance, professionalizations, jobs, competitiveness, and very importantly, clear aspects for listing on the stock exchange in the future, and this means better liquidity and a bigger capital market in Romania. Larger companies do not grow in isolation. They developed in the presence of investment funds, which accompanied them step by step, from the first round of financing until the moment they become regional or even global players. So some became unicorns. Others, important issuers on the stock exchange. Also, they need financing, so they need trust and capital. So let's think about a young company founded by a few visionary entrepreneurs. They have ideas, courage, they have dedication, but they don't have access to sufficient financing to take the next step. So this is where the investment fund comes in, not just as a source of money, but as a long-term partner for the company. So as chair of the Senate Budget Committee, I'm involved in the regulations that can turn this potential into reality. The Senate recently approved the Emergency Ordinance 26, which allows Pillar 3, as I told you before, to invest up to 10% in the private equity funds. It's a start, but we all know that without a clear opening also of the Pillar 2 to this industry, the impact will remain limited. We need courage and we need vision to move forward, and we also need the involvement of all partners, either if we are regulators, legislators, and you as industry. We need to build this trust, because some stakeholders do not trust the early investment funds in Romania. This is why the industry is limited at this time. But on the other hand, the industry needs the support of raising capital and of the pension funds. So Romania needs solid, competitive companies which are anchored in innovation. But these companies also need capital, they need trust, and they need partners, and you are their partners. Together, we can build this ecosystem where good ideas are not lost, where capital contributes to a real modernization of the economy. Thank you very much.
Thank you, Mrs. Horga. It's indeed an excellent message that you are conveying to the stakeholders, to the industry, and to the authorities, as we need indeed pension funds, which is, let's say, the significant player absent in the industry now, in our industry, we need it next to us as a key partner. I would like to invite further Mr. Alin Andrieș, State Secretary in the Ministry of Finance.
Good morning, everybody. Ladies and gentlemen, it's a great pleasure for me to be here, and I would like to thank Daniela for the invitation. It is a great pleasure to participate in this conference, which is a timely debate on how to further mobilize capital for growth, an issue of increasing relevance at both national and European level. This is something that public authorities strive to facilitate with a particular focus on private capital. While there have been several risk-sharing products to promote access to finance for SMEs in general across the European Union in the last 2 decades, one can see even more attention, translated in numbers and volume, to supporting investment through risk capital instruments. We look forward to detailed proposal from the European Commission on the Saving and Investments Union. The InvestEU program, the European Union's flagship initiative for mobilizing private finance, has recently added a financial instrument specifically aimed at the supporting equity instruments in those member states willing to contribute to the program. In addition, to address the venture capital funding gap, the European Investment Bank has proposed a TechEU initiative to provide 70 billion euro in startup and scale-up funding for innovation and strategic technology sector by 2027. The EIB estimates that this will unlock about 250 billion euro in investments for European technology sector. Also, within the European funding framework, the Romanian government has taken this role seriously and had acted to boost the growth of VC and PE investments. Romanian government has allocated about 736 million euro for new VC and PE investments in Romania since 2012. The largest initiative so far, the Recovery Fund of Funds, financed under the National Recovery and Resilience Plan, with a budget of 400 million euro, received 45 expressions of interest by the end of 2024, of which 11 funds have been approved and already signed for more than half of the allocated amount. As a member of the investment board, I take this opportunity to urge market participants to continue to apply. Recently, serving the European focus on innovation and technology, the so-called Innovation Romanian Holding Fund was signed with the IAIF with a flexible structure to invest in startups, more than half of the total 75 companies expected to be invested. Needless to say, especially for you in this room, but always worth mentioning, that these support measures for the risk capital ecosystem are due to the successful partnership with European Investment Fund, and I'm looking after Camelia Dragoi to thank her and her team for working with us during these years. Thank you. Slowly but surely, the ecosystem is evolving and expanding with a rich perspective to contribute to competitiveness and growth, futures that our economy clearly needs. Private equity investments in strong and financially sound national companies represent a significant opportunity to channel investor savings into economic sector experience accelerate growth. We support a transparent dialogue to create a balanced regulatory framework in which alternative investments, including private equity, are a viable option for the economy. Despite this progress, over the last decade, we still face important challenges in stimulating innovation and encouraging startups to raise larger rounds of investments, while at the EU level, the Competitiveness Compass has set out action to close the innovation gap and promote the availability of skilled labor. The supply side is also constrained by the lack of investments from institutional investors and family offices. In this context, we welcome regional CE initiatives such as 3Cs Initiative Innovation Fund, which is expected to play a beneficial role in facilitating regional venture capital investments by providing confidence and expertise to potential private investors. We also support European and regional initiatives aimed at financial integration, improving access to finance, and strengthening economic competitiveness in the region. For example, the Memorandum of Understanding signed in Bratislava between Central European Stock Exchanges and the EBRD is an important step toward strengthening regional cooperation and developing a more efficient and interconnected capital market. This initiative is fully in line with the objective of the Saving and Investments Union and represents a concrete opportunity to deepen financial integration in the region through improved market infrastructure connectivity, support SMEs, and promoting of innovation. In conclusion, I am confident that the agenda of today's event will contribute to the development of the ecosystem, and I wish you a fruitful discussion. Thank you very much.
Indeed, as you will see just now after Mr. Andrie's speech, how public funding and government support and international financial institutions can support the development of our industry. I would like to invite Radu Dumitrescu, financial services, financial advisory partner in Deloitte. Deloitte Romania is supporting Ropea in the issuance and preparation of its annual industry report. We will reach now, I think, our third annual report, which is due to be published in the following weeks, based on data gathered by Invest Europe. So, please, Radu, share with us.
I hope we'll also have the slides on the screen, if it's possible. Yes. It works. Thank you very much. It's a great honor to be here in front of you again. I have been here also last year to present the report that together with Ropea we are developing on a yearly basis. There will be a lot of sections that you will see in here related to fundraising, investments, exits, related to some ratios of these elements into the GDP, related to, I don't know, EBITDA and turnover. The data, as Daniela mentioned, is extracted from Invest Europe. So the more things you report to Invest Europe as an association and as players in this market, the better will be in the next period, because then the data will be more accurate, more transparent, and it will help presenting a better view of the situation. The study, as I said, has a number of chapters, like fundraising, investments, their percentage in GDP, impact related to companies that are controlled by private equities or VCs on job creation, turnover, and EBITDA. I will start. I will start with the fundraising part, which shows, I can say, a fantastic year for the first time since we analyzed this information. So as you can see, during 2024, around 260 million euros have been fundraised by the private equities in Romania. It is a very big number. If we look to all the other numbers that we see in there, as I said, the data has been improved throughout the years with respect to your reports, but nevertheless, it is a great number. Different private equities in Romania received in 2004 or have allocated amounts from PNRR and other governmental agencies, like AAF, EBRD, and IFC. We have noted a decreasing trend up to 2023, and I remember that we are saying that this decreasing trend is aligned with what was happening in CE, but now for 2024 we see a boost. In terms of locally raised funds from family offices and private individuals, these are mainly going towards VC investments. But I guess this is a new start for private equities in Romania, because I really feel that the future starts now. I really feel that all this money that we see in there will be, after that, invested in here. And to provide a bit more insights into this, I have this slide where we have listed from publicly available information 11 fund managers that have been received allocations from REF or PNRR programs. And you can see here in the first column the allocation that has been received. On the second column, the fund size, which varies, of course, from fund to fund. And then the allocation to Romania, again, based on publicly information. Some of the numbers are still maybe some estimations. But we can see in here, over 500 million euro, most probably will be invested in Romania from private equities and VCs in the next 5 to 6 years, we say. Most of these funds succeeded to close, to have either a first closing or even a final close of the fund. And expectation is actually for these things to continue also in the future. In terms of investments, again, data has been collected from Invest Europe. We have identified in there 14 transactions totaling around 92 million euros. It is most probably a partial number, if you allow me, and hopefully in the next years we will see better numbers in there. But comparing the same numbers that we have taken from the past, we see that we still have quite a good number of companies in which have been invested. We have consumer goods and services, which account for 75% of the private equity investments made in 2024 and reported to Invest Europe. And we also note that in terms of number of companies, around 5 of the companies are active in the consumer goods, 3 in communication, and 2 in biotech. In terms of fundraising and investments as percentage of GDP, we note the fact that indeed we are still lacking in Romania compared to bigger countries in the region like Czech Republic, Hungary, or Poland. You can see them in there with much higher numbers in this respect. But if we look to the tables below, we know the fact that, as I was saying also at the beginning, the fundraising that has been made in 2024 is significantly above what we have received or what we have seen in the past as reported, which gives us hopes that the investments that will follow from these funds will have an increased percentage in the GDP. Indeed, on the last right chart, on the bottom right chart on this slide, you see that the investments in Romania from GDP are not so big, but expectation is to increase. And my personal expectation is that we should be as close as possible to Czech and Poland. Hungary seems to be quite high, at least from the data that is published. In terms of exits, we identified 10 companies that has been sold. There has been a transaction made in 2024 with a total value of 98 million. The preferred exit route is the sale to a strategic or to another company. I wish to be able to see more and more public capital markets being utilized in such an exit. And I will be able to see this, I believe, also in the future. Again, 5 companies relate to communication industry and 2 were from consumer goods. In terms of private equity impact on job creation, we have analyzed the information since 2019, and we can see on this slide the fact that around 18,000 people hired, if I can say so, 18,000 new jobs have been created by companies that are owned by Ropea portfolio members, with close to 20,000 people, 20,000 new jobs being created by PEs in general during this period. Yes, for 2023, which is the last year for which we have information, the increase is not so significant, but still, if we look back, we see very significant increases. Then on the smaller charts on the bottom right side, you see a comparison between percentage of job creation from private equities compared to the Romanian average. The Romanian average is the one with green. As you can see, up to last year, the private equities were able to create more new jobs than the Romanian system. For 2023, the situation is a bit different. It is a bit less than what has been created in Romania as an average. But again, looking for the entire period, we see quite a significant improvement. Around 64,000 people work in companies that are controlled by private equities or venture capitals. In terms of private equity impact on turnover, on these charts, you see the evolution of the turnover of the companies split per industries and also split between Ropea members and all private equities in the market. What you will note in there is that indeed for 2023, on some industries, there is a negative gap, a decrease, especially in the energy part. But taking out the energy sector from the calculation, there is still an increase of around 267,000 euros in the turnover. Also, if we look to the bottom right side chart, you will note that Ropea members have not incurred a decrease in the turnover for 2023. It's some other private equities that control some company in energy that had this. But altogether, we note an additional almost 2 billion turnover in the past 5 years. And this is only for Ropea members, and 2.6 billion additional turnover generated by all the companies that are controlled by private equities. On the left-hand side, there are some numbers mentioned in there and some names of the companies that are part of this analysis. In terms of EBITDA, the situation is not necessarily entirely following the turnover, but still we note in 2023 a decrease in the EBITDA margin. And this is again mainly due to the energy sector companies which had a negative influence during the respective year. There are a couple of names listed in this slide also, but as you can see, energy has been a great generator of additional EBITDA in the prior years. So if we look all together, we note additional EBITDA throughout the last 5 years for both companies which are controlled by Ropea members and companies controlled by private equities. So this is what I wanted to present. Thank you very much for giving me the possibility to work with Ropea and work on this study. When the study will be released, you will have more details available in there. This was just a short intro. And I encourage all of you to continue reporting to Invest Europe, the transactions, the investments, the exits, the fundraising, to be able to have quite some nice industry data available for the next years. And don't forget, the future starts today. We have significant investments last year, which will need to be significant fundraising, which will need to be invested in the next years. Thank you.
Thank you, Radu. I hope that all in the audience, you will remember the number of 265 million euros mentioned by Radu, the amount reported as fundraising in Romania in 2024. This is a premier, I would say, a significant number for our industry and marks the beginning of the future, as Radu mentioned. I'd like to invite now Mrs. Miruna Popa. She is the chair of Level 20 to share with us some information related to the research and key activities and events implemented by Level 20 together with Ropea. Thank you.
I also had a few slides. Okay, thank you. So I want to start off with a disclaimer. I know that the word diversity has become a bit of a buzzword recently, and while it is well-intended, it's often sometimes vaguely defined, overused, and sometimes a little distant from the day-to-day activities in our sector. And let's be honest, the global conversation around it isn't particularly encouraging, especially on the other side of the Atlantic. And sometimes the term also lacks a quantitative dimension that we would need in order to have a practical discussion about how we can use it to build stronger teams and better businesses. But today I would like to take a more grounded approach, and one that doesn't rely on ideology, but on facts, on local data, and on a shared ambition that I'm sure we all have in this room of building a more competitive PE and VC ecosystem in Romania. My name is Miruna Popa, and apart from being an investment manager at Resource Partners, I'm also the chair of the Level 20 Romania chapter. And I think that almost 1 year ago, at the same event, my fellow board member, Ralu Caniță, introduced Level 20 and its mission to many of you. So today we're proud to follow up on that discussion and to officially launch the first Romania PE and VC gender diversity report, which is the result of a joint effort between Level 20 and Ropea with the support of the European Investment Fund. Okay, so this is the first structured attempt to measure the gender diversity in Romania's PE and VC ecosystem. And we see it as a starting point and as a baseline from which we intend to track progress over time. For this edition, we looked at data from 38 firms, covering 138 investment professionals. And the headline figure is that 21% of these investment professionals are women. That is 3% below the European average. It's important to also put this number into perspective, because Romania actually ranks mid-table across the European ranking, which is led by France with 31%, and at the opposite corner we have the Netherlands with 15%. It gets more interesting if we break down this 21% by seniority levels. So at the junior level, women actually hold 37% of roles. This is outperforming the European average. At the mid-level, it's 38%, again, outperforming the European average. But at the senior level, it drops to 12%, which is below the European benchmark of 14%. So, as the data makes clear, our pain point is not necessarily attracting junior talent to the industry. It's retention and progression. And we intend for this report to be the start of a practical conversation about how we can build better systems for mentorship, for sponsorship, and better workplace structures for long-term careers of women in the industry. And while this report shines a light on the leadership gap, we also believe that change must happen early. And that is at the very first point of connection between individuals and the PE and the VC industry. We're also proud of Romania's relatively strong performance on the junior and on the mid-level. And we want to maintain that by ensuring that the early exposure is open and accessible to anyone who seeks it. And that's why, earlier this month, together with Ropea and with the support of IAF and RTPR, we organized the first edition of the PE and VC Academy in Bucharest, which is the local initiative of the broader Level 20 outreach program. We received over 55 applications from students both at Romanian and at international universities, from which we selected 40 participants. And over the course of 2 days, they engaged with investment professionals throughout several sessions. They took part in real-life case studies, and also they asked the kind of questions that give you hope about the future generations. Our goal was simple: to broaden the funnel and to make sure that high potential students, regardless of their gender, of their background, and of their location, have access to learning more about the career in the industry. It was a very rewarding experience, and we're sure that some of these students will become analysts next year. Most of them were looking for a summer internship, so if you're hiring, I can promise you there's a very motivated pipeline waiting on LinkedIn. And most likely some of them will lead the next generation of funds in Romania. We're committed to making this academy a yearly occurrence, so if you're interested in supporting us either by being a speaker or a host, please do reach out to us. So, to summarize, we're still at the beginning, but 1 year after Raluca's presentation, we have data, we have programs, and we have momentum. And with the continued support of everyone in this room, we're confident that we can build a PE and VC industry in Romania that grows not just in size, but also in competitiveness and in talent. Thank you.
Thank you, Miruna. Indeed, for Ropea, education is becoming an important pillar within our strategy and pillars of activities. But now we would like to continue with the technical discussions, I would say. I would like to invite on the scene the speakers in the first panel. First panel will be hosted by myself, Investing in Turbulent Times, Market Trends and LP's Expectations. So I would like to invite on the scene Mr. Cristian Nacu, Mrs. Camelia Dragoi, Mr. Andrei Zvoronoș, Mr. Mugur Popescu and Mr. Iulian Portasa. So thank you for responding to our invitation. We have here in this panel key representatives from all the classes of investors which have supported the impressive number which we just reported on the 265 million euros funds raised in 2024. We have I will start with Mrs. Camelia Dragoi. She's the Senior Mandate Manager for Recovery Equity Fund and part of European Investment Fund team. Mr. Cristian Nacu, the Senior Country Officer at IFC. Mr. Andrei Zvoronoș, Principal Banker in EBRD Romania. Mr. Mugur Popescu, Chief Investment Officer in BCR Fond de Pensii. And Mr. Iulian Portasa, CEO of Inspire Asset Management. Indeed, the number you've heard is impressive, and it's more impressive as long as we look at the past statistics. We have data for the market reported by Invest Europe, and it's looking back up until 2007. And for the entire period, starting 2007 to 2023, the numbers of fundraise reports reported amounts to 281 million euros. This is the number which is not giving, I would say, 100% coverage of the market, but is still a significant coverage of the funds raised in Romania. So over 17 years, fund managers and investors have managed to allocate 281 million euros, whereas in 2024 we have seen 265, in 1 year, 265 million euros reported. What does this number show if we look at also at them in relative terms? Romanian GDP is 65 times lower than European GDP. If we look at investments to GDP for the last 5 years, Romania stands at 0.035 of GDP, which is 16 times less than Europe. Fundraising to GDP for the past 5 years stands at 0.0223% of GDP, which is 28 times less versus Europe, with an investment ratio still of 1.5 times higher versus fundraising ratio. All these numbers illustrate a fantastic momentum of our market these days and an excellent potential funding sources for the entrepreneurs in the following 5 years. As presented by Radu, he mentioned the 11 funds which have received 212.5 million euros allocated under Recovery Equity Fund. And with the efforts of the fund managers, which are aiming to raise more than 1 billion euros, out of which 500 million euros will be available for investments in Romanian entrepreneurial companies. Out of the 265 million euros, indeed 140 million euro, 53%, have been raised from government agencies and IFIs, while 28%, being 75 million euros, have been raised from family offices and private individuals. These numbers, at least the weight of private investments, private investors, it's closing or it's approaching the numbers as weight, as percentages shown in Europe. We will further explore with the panel members what are their prospects on the market, expectation and ideas on what sources can Romania tap to consolidate this industry. So I would like to, after this very long introduction, I would like to ask each of the members of the panel to share with us a few ideas about their view on the local PE and VC market by reference to current statistics, fundraising trends, as well as capital flow trends at regional and international level. Shall we start with Christy?
Good morning. It's a great pleasure to be here again. It's, as always, an industry which reminds me my beginnings of private equity and venture capital industry. So it's a great pleasure. For those who do not know yet, IFC is the private arm of the World Bank Group. We are financing the private sector. The portfolio in Romania has grown almost 5 times in the last 7 years, reaching $2.2 billion, which is the 9th largest exposure of IFC in the world. So why is that happening? It's very easy, because Romania has experienced a fantastic growth. It was a surprise for everybody, to be honest. I want to share with you something, also because my former boss, Jacek Siewicki, is in the room. I want to share with you something which happened 20 years ago, when I was just entering Enterprise Investors as a vice president, junior partner. And at that time, there was an event called Davos of the European Union, of the Southeast Europe, in Krynica. And I was sent there because I was coming from IFC. And I was sent there to sit on a panel about macroeconomics, and the theme was convergence of the countries in Eastern Europe towards the European Union averages. So, because I wanted to look smart, I had to read a little bit, and I learned, to my surprise, that Romania had to grow the next 20 years with 5% per annum in order to have a convergence with the European Union. And it was a huge shock for me then. Now, looking back, I realized that it wasn't so unachievable, because Romania, guess what, grew almost 4% compounded growth in the last 20 years. So that's a fantastic achievement, and that, to a certain extent, reflects also why we grew so much. Now, of course, we try to do also to help the private equity and venture capital industry, and not because just we are generous, but because we feel that economy, companies in the private sector, they need equity. And not only that private equity and venture capital comes with equity, but it comes also with a whole set of knowledge which is absolutely unique and can manage the development of the companies depending on the sector, depending on the stage of development, of course, different instruments for different stages, but they help them to manage the growth that we discussed about it now. So, what we did in the last year, what I can tell you is something which is already in the media, because due to our processes we have to announce our investments. So we have invested in private equity, and I'm very proud to report that we invested in enterprise investors. It's the first time in 35 years that we did that, so we finally managed to do it. But we also invested in a few other local companies, like, well, it's not yet final, but I can say, because it was already in the media, Morphosis is one of them. We are also looking at Mid-Europa Partners, which has had a big investment in the last years in Romania. But we are also looking at the startups, the tech startups in particular, where we invested. We are ready to invest very soon in Druid, an artificial intelligence company. Despite the tragedy which happened with the founder, we all knew Liviu very well, and we were all affected by his disappearance. But we are planning to continue the investment, and also other venture capital funds which are local, but I'm not yet allowed to disclose. So we will try to contribute to the development of the industry, and I'm pretty sure that in the future we will do even more. Thank you.
Good morning, also from my side, on behalf of the European Investment Fund. I was very happy to hear again about the initiative to increase the diversity in our industry, and I hope it will soon translate into a greater diversity of chair arrangements for people of around 1.60 meters. That would also be very welcome, so to be taken into account. But fortunately, differently from me, the local private equity and venture capital industry no longer has short legs. It is something that we are very proud, together with the government of Romania, to have contributed to. And 2024 was a year in which two of our very important initiatives have either continued to be rolled out or being initiated. And they were already mentioned by the State Secretary Andrieș, so just to repeat, of course, the Recovery Equity Fund has to commit into underlying funds around 100 million euros a year. We kept that promise last year, and we will continue for this year with the collaboration of the government entities. And we heard you, the fund managers, we heard the companies who mentioned repeatedly to us that there is a gap of financing in the early stage space and in the tech transfer space. And this is why, together with the Ministry of Investments and the European projects, late last year, we launched a 107 million euro new initiative which will target specifically this segment. And we hope that we will be able to launch the selection of fund managers in the next 2 months. And when that time comes, we will be very happy to come again and speak to you as market representatives and ask for your opinions and clarify every possible condition and aspect for you so that we can together have another very successful program. 2024 was a year in which at EIF level, of course, we reached record equity investments. Last year we did about 15 billion euros of business, of which half was investments into private equity and venture capital. We intend to continue in that way at the European level. And we are also, of course, keeping in line with the most recent developments at the European level by launching, hopefully soon, the TechU initiative, which will target the financing of technology investments up to scale-up stage in the entire Europe. And of course, we are also in conjunction with the European regulator, moving towards more financing in the defense space, also at the European level. For the time being, that's it.
Thank you. Andrei, please, can you continue?
Thank you, Daniela. Good morning, everybody. Pleasure to be here. So I will have more of a global lens and to put things in the context. In general, the private equity industry last year was a bit under, on the fundraising, a bit under this decrease with 30% less versus last year and 40% versus the peak of 2021. But this was a bit adjusted by the fact that investments stood relatively flat. Coming to Europe, which is where we are all looking at, referring to the numbers from Invest Europe, at European level we had 120 billion of investments. So our region would represent roughly 1%. So in CEE as a whole, from Poland down to Romania and the whole Balkan area, we had roughly 1.2 billion. It's very logical that Poland represent the higher percentage of this, but Romania, we heard the numbers from Radu. As a percentage of GDP, we are still very much behind. Compared to Poland, we are roughly 8 times less as a percentage of GDP private equity allocation versus what's happening there. And even compared to Bulgaria, we are still below at roughly 2 point something. In what EBRD is concerned, we had, it's a bit like a new wave in cinema. It's replicated with the directors in Romania. We had a new wave of comers. We invested in Morphosis, in Booster, and also in the VC space in Gapminder. We are locally emerged funds, and we are very happy that they expanding across the region, but we also invested in pan-European funds like Integral that commits funds to our region, AMC, and we stand ready to do much more. Romania generally bucks the trend, so if we see decrease in fundraising across the region, we all saw what happened, and this is very encouraging. This is probably because, you know, still valuation are relatively attractive compared to other countries. We see exits happening, so in terms of number of deals, I think we are now clearly number 2 behind Poland. So all in all, we are optimistic about what's going to happen going forward, and we have another of other funds to allocate resources in 2025.
Thank you. Mugur, please share with us.
Good morning, everybody.
Representing
it's a pleasure and an honor to be here with so many smart people and growing businesses. Maybe very briefly, we at BCR we manage about 2.5 billion euros. And we have commitments in private equity of about 25 million euros. We're very round numbers as we look now, but we started 3 years ago. We are very happy with the exposure. For the moment, we cannot do anything more because we are exceeding the limits, but the regulation allows to carry on with what was done before the change. But we are very close to the community. We meet with funds. Probably when our existing funds will start, decreasing exposure, like selling companies. We will talk more later about what we experienced with the good ideas and less, issues with not with the funds but with the asset class. We are very pleased for the moment. So maybe next year we will start look again and can do new commitments. And in the pension, we are measured by exposure, not by commitments, which is another complexity which we have to manage. Thank you.
Thank you. Julian.
Good morning. Insightful data that I've heard. I'm one of the representatives of the 75 million that the family offices have allocated in PE funds in Romania in the past year. So I'm a newbie in this sense. When we look at the data that Radu has shown us and the DFIs have presented as well, I want to be appreciative of the past 20 years fundraising amount. So we reached at a sizable amount. The sheer size of 1.4 billion is impressive. Now, no good news comes without its problems. So when we discuss with the funds that we invested into, there's always the discussion about whether they can deploy it and how they can actually increase the amount invested. So when we discussed with Morphosis, Booster, Boldmind, and Integral, being the funds that we invested so far in the past year, we approached their value creation strategy quite robustly, having also the benefit of the family that has legacy business and has increased those businesses through operating excellence. So we always try to approach that, and we see that the GPs as well, they are keen to look at integrating and actually embracing the operating value creation as much as possible. So I'm really happy to see that.
Thank you. Addressing now to the IFIs who have invested and have strongly supported throughout the past 15, 20 years the development of our sector, I would like to ask them to share a few thoughts about how they see their role into the growth of the industry. What are the key criteria or important criteria when they select fund managers in which they invest? And also, how important is the performance in deciding the performance of the fund and of the team in allocating an investment? Because there are voices, let's say, or private investors which argue that public or IFIs, public funds, they are more focused on development and less on performance. Just as a brief background, the Invest Europe data shows that performance of private equity and venture capital funds measured in terms of annual IRR is around 15%. So I would like to ask Cristi, Camelia, and Andrei to share a few thoughts on these topics.
Well, when we are investing as an LP in a P or VC fund, we are trying to be as typical as possible LP. So, of course, we cannot neglect our main, let's say, goals of development, but we look at the performance also. We are trying, as I said, to be as typical as possible LP, and we look at the performance, we look at the composition, we look at the experience of the managers, because everybody knows in this industry that from the second fund it's easier to invest because you have something to look at, the previous performance of the first fund. But for the first fund, it becomes even more tricky because you need to assess the capacity, the individual capacity and the experience of the partners, of the management team, and the, let's say, chemistry between themselves. And the way they work together is not necessarily a sum of the individual qualities. So sometimes you have to understand as much as possible how they work together, how they created the team, what are the expectations of each individual. Having said that, we are also focusing on our core, let's say, conditionalities, which are related to the development role, and sometimes our presence in the fund is linked to our catalytic role. If we play a role in that fund let's say in a moment when fundraising it's not as easy as possible as usual, then we can justify our presence there. But also the other elements, let's say ESG, we are probably the ones responsible for putting the ESG on the agenda of the private equity industry. But I think it became already it's been already embraced by the entire industry. So we are happy to see that. That's, having said that, I think this is the typical way we look at the funds and the fund managers, and we are so far very happy with the performance.
I would like to complement what Cristi has said, which a part of our pre-investment analysis, which is perhaps less talked about, and that is the integrity part. We pay great attention to our reputational risk, as do all the development financial institutions. And this is the reason why even teams that can be considered economically performing may sometimes not obtain financing from the EIF or from the other DFIs. If you have a team, a good team, which behind it has sponsors with serious reputational issues, that is a no-go for us. We are also looking very carefully into governance matters, into having independent teams and not teams that are captive. We are looking at the substantiation and realism of the track record that is presented to us, because very frequently we see companies paraded between various holding at increasing valuations. That's not performance. And all of that means that we are trying to combine the reputational integrity of the teams that we select which implicitly affects our own integrity, with the development aspect, which is dictated by the mandator that entrusts us with resources, which can be the European Commission, it can be the Romanian government, or it can be some other regional government or private investors. And with the, let's say, always the implication that we are looking to make money. Otherwise, it would be impossible for us to bring private investors together with us. I agree that on the very early stage, on the acceleration stage, the public investor needs to take a higher risk. That is the grassroots building of the ecosystem, and this is what, together with our mandator, the Romanian state, we have done and we will continue to do. But when it comes into VC and PE, those are commercial businesses for us. And although so far we have few results to show, given that these are assets which are playing the long-term game, it is known, for instance, in the market that Morphosis has already made 30% on the investments that they have sold. This is public information. So we can talk about partial financial results which are already looking very well. The same figure, or in the ballpark of the same figure, is already shown by our first Jeremy fund, which is Catalyst Romania 1. And while, as time progresses, we will be able, hopefully, to see at portfolio level the same quality of the financial performance. So for us, it is a combination of the developmental and commercial features, and we ourselves as an institution, we are making money for our shareholders. We charge for our services, as indeed do the fund managers. So it can be combined, and it can be happily combined.
Thank you, Camelia, for sharing this.
Yes, so at EBRD, we are also, like the other IFIs, committed to the development of the local ecosystems. We try to be present across the whole spectrum, from VC to growth, buyout, and even infrastructure funds. Typically, we do 300 to 350 million per year. Out of this, the tickets that we look at are of minimum 10 million, but in the range of 15 to 20%. So this tells that the sweet spot that we are looking after is generally of 100 million plus for the funds that we are investing in. And this links also to the fact that generally the larger funds tend to perform better than the smaller one, and also that the ones that have a focus on the region as opposed to single country are a bit more generative in returns. In terms of criteria, obviously we look at the development ones, and I'll refer to them, but we have a sound banking mindset, and this means that we look also at the returns that these funds generate. We are very much aligned with the profile of the commercial private equities operating across our region, and this means that in terms of IRRs, we also focus on at least mid-teens returns. 15% was mentioned earlier. We are very much aligned on that one. We also like a lot to see some TVPI of a tune of 2 times money general, but this is linked very much to the fact that most recently the mantra is the distributed paid in capital is becoming the new IRR. So we also like to see some deals when we are interacting with funds that we invest in. At minimum, we would like to see some 2 deals that were exited and some returns generated from that investments to the tune of 2 times money on the invested capital. And then coming to the development role, we obviously interact a lot with the organization that operate industry-wise in the countries. We have a lot of policy dialogue. We have naturally a lot of focus on the green. We invested roughly 800 million in all the funds that we committed to in private equity, and also on the digital side that it's also prevalent on our logic. We have committed roughly 300 million to the VC ecosystem. So all in all, we are contributing. We typically mobilize funds when we commit to our private equities of roughly 3 times the euro that we put in. So I would say we are naturally a development institution, and we are looking at this through the lens of the ESG platform and the overall development of the market. But at the same time, we very much look at the competitiveness that we bring, and this is
your investment experience. Which have been the barriers that you perceive that as a pension fund player in increasing your exposures? Maybe you can talk about internal and external barriers.
The main two that are now is the limit imposed by the regulation, which is for Pillar 2, 1%. For Pillar 3, we've seen a progress to 10%, actually going back to the 10% that it was while we were invested. Unfortunately, Pillar 3, as everybody knows, it's quite small in comparison with Pillar 2 funds. So there we have in the range of 900 million RON, so not much room to grow there. Other barriers, so risk weight. In private equity asset class has a risk weight which is lower than public equity, which is the worst risk weight that you can have in the portfolio. So that's why return expectation should be very high from our side. So if you do a risk-return calculation. So these are the barriers. I think we can overcome that easily. And I'm very positive. Also that we see now, we have some results. I mean, everybody can see starting to see the returns. When we see some exit in the country, I think everybody is aware of supermarket like Cocoș, for example, which is an investment for one of our funds, or Verdino, which is a meat replacement producer. So I strongly encourage you to visit La Cocoș and taste Verdino products.
Thank you. Maybe you can also share a few ideas, Mugur, about how difficult has it been to develop within your maybe these two investments. We know there is, as you mentioned, indeed, the theory, or let's say the analysts say that investment in such an asset class is contributing theoretically to the improvement of the returns of the pension fund, but it comes with a minus, the fact that investments are less liquid, cash flows are initially negative for the pension fund, and then they take time to build up and to become positive. And then actually, in order for the pension fund to see the benefit of this investing in this asset class, it takes to have continuous investment strategy. So it takes to have every year allocations in order to build up indeed a positive contribution.
Yeah, that's right. We have actually did a lot of modeling to see how our grasses will grow and how we can manage. I think we understood the G curve, so there was no surprise. We also been like our funds are only 3 years old. They have not finished the investment period and they are already profitable, as I mentioned. No, actually, internally, I haven't seen. I've had management support. I mean, the team was all in. We passed a lot of, scrutiny for this 1% allocation, so everybody was happy. Unless there is a, change in the material change in the portfolio, I don't see, internal limits to grow this asset class at this today.
Thank you. We hope to hear soon of new investments. Julian, you represent a very low-profile investor with relatively lower investment history in this setup, in the current setup, to my knowledge, less than 2 years, if I'm not wrong. Can you please share with the audience some key aspects related to the reasons for setting up this family office, your vision, mission, your investment strategy? So I'm sure the audience and ourselves, we are keen to hear as much as possible information about your activity, investment activity.
Well, it's actually been 1 year. Effective of 1st of May, we reached that milestone. So the family office, actually the investment vehicle as of today, is set up by Iulian Stanciu, one of the most, I would say, renowned entrepreneurs in Romania, with the end game of setting a proper family office. In doing so, we looked at how to do it first and what to do with it. So in looking on how to do it, we looked at London, School of Economics, and LBS as well on their approach, theoretical approach. We discussed with others, and we reached the conclusion that each family office has its own seasoning, in a sense. So that created another problem that we are still in progress of implementing it. And the second part is what to do with the wealth. So we focus on capital preservation as much as possible, but also investing with impact and investing in a structural way. That's why in the strategy, the investment strategy sort of resembles the pension funds, but with more risk appetite. We approach the investment strategy through a barbell strategy, in the sense that we are looking at multiple revenue streams that are uncorrelated. So we have 1/3 of the capital allocated in the private equity sector, 10 to 15% for direct and co-investment opportunities, and the rest is public markets, hedge funds that are global. Now, being at the Ropea, you are interested more on the private equity space. So how we approach this is we have a number of preconditions that have been discussed with a good number of you. We want to have Romania-centric funds because we believe in the macroeconomic conditions. Despite the current situation, we do see long-term tailwinds that are beneficial for us. That's why we prioritize funds that have a Romanian presence. Second is we ask kindly the funds to invest in the team and increase the new generation of PE professionals. And we nag them a lot about the operational value creation plan. So as of today, our ticket for this area is between 5 to 15 million euros per fund. And I think we are more than half of the amount allocated last year. And we did also 2 direct investments and a co-investment with one of the funds that we invested with as well. So far, we're still exploring.
Thank you very much for sharing this, and we hope to continue to see you as investors in the new teams and fund managers which will announce their first closings. Speaking of fund managers and their investment strategies, and I'm addressing a question to all the panel members, how do you see, how can you comment the list of announced players, or let's say the new generation of fund managers? What do you see, what do you think about their strategies? Because we have now, I would say, quite a good range and representing the whole spectrum from venture capital to growth capital to even buyout capital. Do you think there will be enough market opportunities for them to invest in Romania? And is there any risk of pushing up the investment prices, the acquisition costs for their companies? Christy, maybe you can start, please.
Yeah. So first of all, I think it's impressive what happened in the last years in Romania, because the number of VC funds which have been created is impressive. 11, 12, 13, according to other figures. Anyway, an important number. Similar private equity firms. And I think this is, and I must admit that this is mainly due to the efforts of the Romanian government through EIF, who have been really a catalyst on all this development. Now, of course, this gives us also reasons to be more dedicated to Romania and to be more careful and put more money at work. Romania has been also an important country in terms of technology industry, technology companies. The number of startups which appeared in the last years has been absolutely impressive, more than 2,500 or something like that, which is again a result of the development of the IT&C industry, which is now probably providing more to the GDP than agribusiness, for example. So these are all reasons to continue to be very careful and dedicated to Romania and to investing in these sectors. Now, of course, the Romanian offer in terms of companies is not as impressive sometimes as funds would want to, especially in the large tickets, because this is where the industry is, the economy is much more concentrated. So there are not so many companies, but quite attractive, some of them. My hope is that especially for the VC industry, there will be enough activity in the future due to what I said, the development of the IT&C sector. But not only, also there will be, hopefully there will be more understanding from the government side that the balance of viable SMEs should be changed. The number of companies which still have negative equity is absolutely outstanding, which is very bad, and it's just a matter of enforcing the law. The different legislation which has been promoted in the last years didn't encourage companies to capitalize. I would say the opposite. Taking out dividends instead of keeping them in the company due to the fiscal incentives, allowing shareholders to bring shareholding loans instead of increasing the capital of the company. This have not helped. Hopefully, regulators and the state will understand that and will change something so that also the banking and the VC and the private equity industries will have more, let's say, raw material, will have more companies where they will be able to finance or invest so that everybody will do better, let's say.
Thank you. If we are referring to the funds that have been so far supported from the Recovery Equity Fund, of course, I like all of them. What am I going to say? We believe on substance that we have achieved a good mix of venture capital, private equity, and the first allocation to an infrastructure fund dedicated to renewable energy. It is a large European fund which has committed to invest part of its capital into Romania. We have achieved a good mix of new teams and existing teams, and we believe that also at sector level there is a good mix of funds investing in, of course, technology, but also in brick and mortar and services such as medical services and other type of services, to the extent, of course, dictated by the market. The beauty of this program and the reason why we took on such an ambitious initiative with such a large budget was the flexibility that we are able to give to the fund managers to follow what they are able to do by nature of the experience and expertise of their team. So here's to the next 7 or 8 funds which will continue to, in a complementary manner with the existing ones, to invest in what they know, and combining, as I said earlier, the developmental angle with good results for ourselves, for our mandator, and also for the many private co-investors, most of them high net worth individuals who have entrusted these fund managers together with us with putting this money to work and making a profit. Thank you. Ungur.
Yeah, speaking along the experts, which they have a much bigger view, but I can see some empirical evidence. You have a very good question if how is Romania, if it's a bit overcrowded now. I see, I mean, we see deals are in Romania, I think it's slightly higher rate evaluation in Romania, but you should know better, the fund manager should know better, but I see it like, especially in IT, and also have some, difficulties sometimes in, getting the plans done in Romania. So it will not be an easy ride, even if we pass the fundraising cycle to get good deals and get them along the way to the end. But yeah, at the end it's a transformation for the companies and will come up, but it will not be an easy ride for the funds, I would think.
Thank you.
At EBRD, we typically invest a little bit more than 50% with existing clients, whereas to build the ecosystem, roughly the other half is committed to new clients, be it funds that we haven't cooperated with, or even first-time first-time funds coming in our direction. In Romania, in particular, we had the Booster as a first-time fund. Obviously, they had a previous track record that we very carefully looked at. We, of course, don't want to see a lot of overlap between the funds, because that was, it is a bit telling in terms of the market depth that exists in a certain country, and we are happy to report that in general we've seen a lot of proprietary deals put on the table, and we've seen also execution of the pipeline in alignment with the strategy that was declared, so not much of a style drift that it's generally not too well appreciated. Romania, in terms of offering, I would say, given from where we start with, again, with a percentage of deals from private equity to GDP still at a very, very low base and 8 times less than Poland, offers a lot of opportunity. We are hearing a lot the narrative, the overarching narrative that there's plenty of debt available on the local market, but not so much in what the equity contribution is concerned, and private equity covers this gap. And in terms of opportunity, there's still a blue ocean approach that can be allocated to our country in terms of what's still to be fished by the commercial fund managers operating in our country. So all in all, there's a lot of catch-up to be made. We covered a lot of ground. We raised new funds. There's a lot of deployment to be made, and I think the opportunities are here. Exits are happening. Entry valuation are generally a bit lower than in Poland, so I would say everything bodes well for the future. Being mindful to a certain extent also to the macro situation in Romania, that I guess it's in everybody's mind as a backdrop impression. Positive.
Thank you. Julian?
That's for sure. I'm echoing what my colleagues are saying. I'm still optimistic that the valuation multiples will still stay high when we exit. So fingers crossed on that. However, there is a lot of catch-up when we look at the more mature market, both in valuation multiples and also regarding operating value creation. So I know that I sound like a broken record, but for us, when we look at the potential for EBITDA growth, it should offset any multiple destruction that could occur at any given point. So I'm optimistic that we still have a long way of catching up, so, but no pressure.
And to close the panel, maybe Julian, you can, we take it in reverse order since you mentioned again, like a broken record, this topic of value creation. Maybe I would kindly like to ask all the panel members to have in 10 seconds an advice to the fund managers which are in fundraising or are intending to fundraise. What would be your most important advice that you would give to them, that you'd share with them, and they should internalize in order to submit to you a convincing application for investment?
In speaking with high net worth individuals, at the end of the day, they understand how you build a company, not necessarily how you pick a company. So articulate and properly proper structure of implementing a value creation plan on the company level, that's paramount. And also that cascades also for the GPs. You are also a company at the end of the day. You need to invest within you.
Thank you.
Yes, so I would say that it's important to be perseverant. It's not easy to get funds from EBRD, but it's happening, and we show that this is the case. Differentiate in terms of fund strategies, and it's not easy for us to consider 10 funds in infra in Egypt, so same cascades in our country. And I would also encourage you to do co-investments with us, because these are well received, and we can do tailored products like payment in kinds, bullet structures that typically can enhance value and extract more better multiples at the exit.
Yeah, I like multi-country funds. You get better to have a bigger fishing pot than a smaller fishing pot. I also want to see the multilaterals, 1, 2, or 3 of them on board. So I think this is a good start.
Thank you.
I think for us it's very simple. We are looking from our fund managers for the same thing that they are looking for at the level of the portfolio companies, the capacity to execute. And on top of that, as I said before, just be clean and stay away from legal trouble.
Thank you.
Just one final word. I don't think there is a possibility today to raise funds without at least some of the IFIs and the big investors. But don't take no as an answer. Keep insisting, keep perseverating, keep coming back to us once you have more performance, once you have something to show. So this would be my advice. Thank you.
So thank you very much for the insights you shared with us, for attending this conference, and for supporting the growth and development of our industry. I would like to invite you all now for a short break. Unfortunately, we are about 15-20 minutes late with our schedule, but I would also like to ask you to reconvene within 15 minutes for the next 3 sessions. Thank you very much.
Good day, ladies and gentlemen. I know it's quite difficult now. We have maybe another 45 minutes before the lunch, and therefore I'm probably asking for your patience for a bit. I would like to start by thanking very much the board of the association for this kind invitation to host today this fire chat discussion. In the same time, I would like to express my full gratitude, for the very nice word that the new chairman of the association, Andrei Gemananu, because I was really very honored to be part of this incredible journey of the association, particularly over the last 5 years, and to take it up to this point. I think there is a very bright future ahead, and I wish to Andrei and the whole board and the whole association a wonderful journey moving forward. I have the pleasure to introduce to you today one of the pioneers, and I could also say the veterans, of the private equity industry in Central Eastern Europe. Jacek Sewicki. We know each other for the last more than 25 years, from the days of enterprise funds. Welcome, Jacek.
Thank you.
For my younger colleagues who do not know Jacek, I will just say a few words about him and enterprise investors. Jacek is the chairman of the board of directors and the president of Enterprise Investors. He joined Enterprise Investors in 1992, and he is managing the firm's operation and is responsible for implementing the strategy across the whole Central Eastern Europe. Enterprise Investors is probably the most experienced private equity player in Central and Eastern Europe. Active since 1990, the firm has raised 10 funds which have invested and committed 2.4 billion euros in 160 companies and exited 140 companies. It's an absolutely impressive track record. And AE's Enterprise Investors team of 31 investment professionals brings together unparalleled regional expertise and consistent performance track record across market cycles. 35 of these 160 companies have been taken to IPO, and Enterprise Investors just raised 3 weeks ago the Polish Enterprise Investors Fund number 9 at 340 million euros. The aim of the discussion today with Jacek Sewicki is to deep dive into a comparative analysis of the Polish and Romanian markets and private equity and venture capital industries to identify key elements which contributed to their different historical development and hopefully to derive some lessons for the future. A few days ago, Jacek has given a detailed interview, an extensive interview to Ziarul Financiarul, and he answered many of the questions related to Enterprise Investors' activities as well as its Romanian portfolio companies. I shall try not to repeat the same questions today, and I would recommend for the interested persons to look forward and to follow this online interview at Ziarul Financiar. Jacek, when we first met in 1998, Poland was
on the road to Pitești.
I do not remember this detail, but anyway, probably were visiting at one point a company, I guess, at that time. But anyway, Poland was in the forefront of the Central Eastern European economic, social, and political convergence towards Western Europe. Poland was significantly ahead of Romania in the economic, but also private equity and venture capital industry. And the general consensus between industry practitioners at that time was that the difference and the delay between the two countries at that time was between 5 to 7 years. You made, at that time in 1998, your first investment in Mobilizing, I guess.
That's right.
How did you look at Romania as compared to Poland back in 1998?
Well,
I arrived yesterday, and a young driver picked me up to the airport, and he said, "Sir, is it your first time to Romania?" I said, "No, I've been coming to Romania when Orange Romania was still called Mobilrom." The guy said, "Sir, I'm only 22 years old, I don't remember that." So that was a little bit scary. And my first recollection or surprise when I arrived to Romania in the late 90s was that throughout the 90s I was accustomed to all these foreign experts and advisors telling us how we should catch up with the West and what we should do to improve and so on and so forth. I arrived in Romania and everybody was looking up at us. And, wow, you guys in Poland, you have achieved so much. You have the functioning stock market. You have a growing economy, this, that, and something else. And that for me was something completely unexpected, because I was completely not accustomed to the fact that somebody can look up at us and treat us as a potential role model. So it was really a nice feeling. Well, I guess it subsides. Now, as I was telling Horia, you guys are at least a week ahead of us, because you chose your president, we haven't yet. And it seems to me you chose right, and we're still at the crossroads. And to be fair, you know, in 1998, our fund, vintage 97 back then, we focused on Poland only, and we had to go for a special permission of the LPs to invest outside of Poland. So I was promoting the idea of, I'm sure that growing economies like Romania or large economies in the region like Romania will have promising developments, and it will be nice to try to find opportunities there. We were actually, and I arrived because we started looking at opportunity to buy a piece of Mobilrom, where we were learning from our mistake in Poland in the mid-90s, because we had an opportunity to invest in mobile telephony in Poland in mid-90s. And I thought, you know, mobile telephones, the size and the weight of a brick, and coverage more or less among the main roads, along the main roads in Poland and in the big cities, that will attract, I don't know, 50,000 hobbies or guys like that. We made a mistake, we learned from the mistake, we decided to learn from that, and that's why we approached an opportunity in Mobilrom, later on in Orange Slovakia as well. Just one little trivia fact, back then when I was finalizing the investment memo, mobile penetration in Romania was 3%. 3%, ladies and gentlemen. I think it's somewhat different now. Yeah. So it's like the classic proverbial story of Mr. Bata, who went to Africa and they told him there is no market for shoes in Africa because everybody walks barefoot. Mr. Bata says there's a huge market for shoes in Africa because everybody walks barefoot. And to some extent, it was not a question of walking barefoot, but Romania back then seemed to me very, very similar. There was an opportunity. I mean, Romania slowly started coming out of the 1990s hole, and I thought because of its sheer size, the economy has to create compelling opportunities, and yes, it did. Mm-hmm.
Well, I guess this is a first lesson here, because although obviously, and you'll come to this point, the gap between the two countries has narrowed down significantly over the last 20 years or so. Still, there are some gaps, and not talking about only Romania and Poland, but between Romania and other more developed countries. So, good tip for our managers here in the audience would be to look after what has happened in more developed countries, and then to come back at home and to try to replicate to a certain extent the things that they have seen happening, of course, mutatis mutandis, in these other countries. That's exactly what happened with enterprise investors, that being able to transpose this knowledge or developments in Poland and then to Romania. Jacek, in the meantime, after 1998, after the lost decade of the 90s, Romanian GDP per capita in power purchasing parity has grown 4 times over the last 20 years and reached a level very close to Poland at 76% of the average EU. This success story emerged on the back of substantial money inflows coming from foreign direct investment, more than 125 billion euros, but also European funds close to another 100 billion euros. However, the rapid convergence of Romania was not very smooth, And while the 2008 crisis deeply affected the economy, the same happened after the COVID-19 crisis and more recently because of the war in Ukraine that started in 2022. How did Poland overcome the challenges of these economic cycles as well as geopolitical events and crises, which for Romania have been more profound? I'm also interested from your perspective as investor manager of private equity portfolios, which have been affected very much during this crisis.
Well, Poland has always an advantage. I mean, Poland was always called the most funny barrack in the Soviet Union camp. But keep in mind, private entrepreneurship and private ownership was always allowed in Poland, even in the 1950s. So, for example, I invested in a jewelry company which was established in 1840 and was in business ever since. It's impossible for Romania, it's impossible for the rest of the countries in Central and Eastern Europe. So Poland had a big advantage because of this huge, large part of the economy being developed by private entrepreneurs. We had laws which allowed also for foreign-owned businesses to be established already in the 1970s. So from that point of view, I think we were somewhat different than the other countries in the region, and that made it easier. And finally, obviously, you know, back in the early 90s, when I was still in the government for a year, Balcerowicz introduced this so-called shock therapy, and everybody now knows that neoliberals is the bad thing to do, but back then, we started growing in 1993, and we grew consecutively every year ever since. I think that lack of similar shock therapy in many other countries, Romania included, was also one of the reasons why it was easier for Poland to go ahead of everybody else. Foreign diaspora, you know, Chicago was the third or second largest Polish city on earth. Because of the immigration throughout the entire period. So these factors, and obviously finally the sheer size of the economy. You know, 36, 7, 8 million inhabitants and the big purchasing power of the Polish consumers enabled the growth of the business, but to some extent were detrimental to the growth of the Polish businesses because the local market was so large that some of the Polish businesses neglected to expand abroad.
Well, it happened thereafter, and we'll come to this point in a second. But let's move to present and briefly discuss about the current economic and geopolitical situation in Romania and Poland. Both countries are neighboring a war zone. And Poland has strong economic relationships with Ukraine, and the war has negatively impacted population and businesses as well. However, not all of these effects were negative, since many Ukrainian businesses and also talent, primarily in IT, moved to Poland over the last 3 years. Unfortunately, this didn't happen in Romania. Recently, as you all have noticed, presidential elections in both countries, although not finished yet in Poland, and I wish you all the best for the next Sunday elections. We all badly need for the European parties to really win these elections and to confirm the victory of pro-European forces here in Romania. But coming back, we have seen that both the president of Romania, newly elected, but also the runner-up, they were in Poland over the last week as an answer to the respective parties' support for their campaign 2 weeks ago in Romania. This is unheard of, and really this shows some interesting features for the future, I guess. On the economic side, I would only mention the Friday's title in Ziarul Financiar immediately after the announcement of the Maspec's offer for acquiring Purcari on the stock exchange in Bucharest, and I'm quoting now, Polish landing in Romania. Over the last 2 years, Polish firms have made more than 10 acquisitions in 10 different sectors of the Romanian economy. your presence here today, it's also another evidence about this renewed interest of Polish businesses regarding Romania. How do you see the future economic and political cooperation between Romania and Poland? And what do you think about the potential rapprochement, strategic rapprochement between the two countries?
Well, for most of our portfolio companies that plan to expand in the region, Romania is the next logical step because of the size of its economy. I think about 5 of our portfolio companies have made acquisitions in Romania in the last 3 or 4 years. The 6th one is being negotiated, 6th and 7th one actually are being negotiated as we speak. So while we haven't made a direct investment in Romania ourselves for some time, we're very present through our portfolio companies. Some of them are just present here through e-commerce and an export type of activity. So I see quite a lot of opportunities going forward for stronger cooperation between selected businesses in Poland and in Romania. And Maspex is just a great example. Maspex has been here, I don't know how many years.
6, 7 years.
Yeah, it's many years.
Yeah.
And obviously, you know, the political developments, hopefully will go in line with the same NATO, EU policy after the presidential elections in Poland. And these political developments, they should help a lot. I mean, I learned to my utmost surprise today from Horia that Polish Prime Minister allegedly addressed the Romanian citizens in Romanian. I didn't know he speaks Romanian, although I know the guy because I studied with him back in the late 70s, early 80s. So this is just another symbolic gesture which I think will help foster better relations between those two countries.
Yeah, and Donald Tusk is not the first time he is addressing Romanian public. He did it also in a very touching way, I think 2-3 years ago, I'm not sure on what occasion, but it was really touching because I remember he was talking about some Romanian symbols here, and I remember his speech was really well regarded. And I hope that, you know, the new presidential administration is going to, in Romania, and hopefully also in Poland, is going to really start looking to this potential cooperation here in the region, because we are the largest economies in the region, and you know, this is also related to Ukraine, a very interesting potential strategic alliance, I may dare to say. Maybe I'm going too fast ahead, but I'm very positive about these opportunities.
Personal deficiency that I have to confess, after 20-something years of coming over here, I cannot utter a proper sentence in Romanian, so.
Well, do you still have some time now? Because I hope
learning at that age.
With the new fund, you'll probably come more often here. I'll just take a short parenthesis because I do know that you have some local preferences, and I hope you'll continue to support the wine industry in Romania when you'll come. So
that I will.
It's another good reason for you to come more often here. Jacek, when it comes to the private equity and venture capital industry, according to also some of the figures that have been presented lately, one has noticed a less clear past growth for both countries, and the PE investments as a percentage of the GDP shown by a 5-year average between 2020 and 2024 accounts for, I'm sorry to go back, but I'm a mathematician, so that's why figures for me are quite important, accounts for 0.12% in Poland. I'm talking about total investments in the Polish GDP, only 0.037% in Romania, as compared to the EU average of 0.6%. This shows that despite the significant catch-up and the substantial progress made over the last 20+ years, still our region and both countries are significantly lagging behind Western Europe. However, the region has already its recognized champions, and enterprise investors is clearly one of them. After 35 years in private equity, Can you tell us what were the key elements of your success story?
Well, I think, way back when, and it's funny because, we used to be Polish-American Enterprise Fund, Horia was Romanian-American Enterprise Fund. Surprise, surprise, everything starts with the government, or with the governmental money. We raised the first commercial fund back in 1992, so the road was paved by the government, but then the commercial investors followed, and that obviously helped. We were unfortunately or fortunately the only game in town in Poland until 1995, and I'm not sure why it had to be destroyed, but so be it. Competition came in, money started flowing in. Where I think the road to cover these deficiencies in percentages of GDP is today, the word was used quite often, the ecosystem. We've seen quite a successful development of I call it symbiotic ecosystem, to make it sound even more scientific. Because, some years ago, we only had, in the chain of ecosystem, we had the so-called 3 Fs, fools, family, and friends, who were funding the businesses at the very early stage. A few business angels, almost nothing in venture capital, and then medium-sized, large private equity funds like us. With a 20 million euro minimum equity ticket, it's impossible to cover that gap. Over the last number of years, and the same is, I think, happening in Romania, EIF and the governments have provided a lot of money to develop the venture part of the equation. So now in Poland, we are now closing, just about to announce the next investment next week. We're closing our 5th investment where we're buying out financial sponsors from existing portfolio companies. This is something new compared to even 5 years ago. 5, 7, 10 years ago, it would be impossible to find such targets in the market where we could deploy 20+ million euro, buy out a large majority stake, and still and continue growing the business. So I think that the chance for covering this percentage of GDP gap lies in this successful development of this ecosystem, from friends, fools, and family, through business angels, through early stage, through next stage, and then guys like us coming in with big money, and finally taking the company public on the Warsaw, Bucharest, or Zagreb Stock Exchange. And this is probably the only proper way to change these percentages for and catch up with the with Western European standards. Because I don't think that we'll have a lot of, the profiroms of the world, they happen every, 7 years, and that's about it. So you cannot really build a foundation on large deals like that.
You are touching on a very sensitive point I wanted to raise anyway, and also to ask you a few questions, because we see some sensible differences between Poland and Romania when it comes to the entrepreneurial environment. And I think if you look at the Romanian economic structure, you are going to see a very large number of micro companies, generally undercapitalized. On the other side of the spectrum, you are going to see a few large and very large companies, foreign-owned or state-owned. And these companies are producing more than 80% of the GDP of Romania. In the same time, we continue to see relatively little public investment in the economy. And to give you some figures, in 2024, in Romania, public investment accounted only for 6.8% of the GDP, and I'm including here also the European funds, whereas in Poland, this figure was at 20%. This situation makes the target market for potential PE investments in Romania relatively limited. How much of your success story is the result of a very strong entrepreneurial environment in Poland and of public policy stimulating the setup and growth of local private companies? And where do you see Romania from this perspective? You already mentioned ecosystems, and that's a very good point, because we have seen these very good figures today in the presentation made by our friend Radu Dumitrescu from Deloitte, but also by Daniela and the panel, LP's panel, showing about this exceptional 2024 in terms of fundraising. But this is very recent because we have this recovery fund only up and running for the last 2 years, and I'm sure this is going to make the difference for the next few years. But again, this happened in Poland long ago. We are advocating at the level of the association for more than 18 years for the Romanian government to set up a fund of funds with public money to doing exactly what today the recovery fund is doing. Not very successful. So coming back on the question, how much of this different situation in Poland coming from the past, a lot of entrepreneurs, you already mentioned the history before 1990, but also the ecosystem that has been put together by public authorities has helped you in the fantastic developments.
I think it will come in stages and waves. I mean, back in 1990s until mid-2000s, we were basically providing growth capital. So we were acquiring large minority, rarely majority stakes in businesses which continued growing and which needed the capital to finance the growth. Buyouts started sometime 2005, give or take, and primarily buyouts, not leverage buyouts, because leverage was not really available back then. Then it started being available now. So from the first, 15 years of growth capital and very little buyouts. We're right now 75% of buyouts and 25% growth capital. And buyouts, 75% of our buyouts are what I call succession-driven buyouts. So the entrepreneurs who have grown their businesses, who have aged or changed their lifestyle or got sick or whatever, they decided to sell out, and this is where we step in and take stakes in the businesses, very often bring in management talent from outside. And this smaller percentage of our activity, 25% of this growth capital, is with younger entrepreneurs who still want to keep controlling stake in their businesses, but would like to get some money to fuel the growth of the business, and also would like to cooperate with the private equity fund in terms of properly structuring their businesses, creating management teams, creating incentives for the management teams, and also expanding abroad through the buy and build strategy. So I think you will see similar developments in Romania, and it's easy for us in the 60s to say, but it'll come with time.
Thank you very much. There is another clear differentiating element between the two countries, and also one of the distinctive marks of your performance in the last 25 years. I'm talking about your fantastic track record in exiting companies through IPOs, primarily on the Warsaw Stock Exchange. How do you see the role of local Central Eastern European stock exchanges in the future? And I'm referring to also the Romanian case, which unfortunately is very difficult to be used as an exit for private equity investments since the liquidity is extremely small. And this is not happening only in Romania, this is happening in all the other regional but also Central European, not only Eastern European markets. How do you see the role of stock exchanges in the future?
Well, again, depends on the point of view. If you look at, last autumn we tried to float Studena's, the Croatian supermarket chain, with a dual listing in Warsaw and in Zagreb. From the local investors, or Croatian investors, that was, and Croatian retail investors, that was a great development. From the Polish financial investors, that was okay, but since you insist. From the foreign investors, that's why. And so this dual listing, it can be helpful because it allows you to attract a wider pool of capital, even though it will be a small portion of, 5, 10, 15, 20% from this local stock exchange, most of it from Warsaw. So it's a nice to have for the local investors. And it's a nuisance for the foreign investors, not to mention a little bit of, technicalities between, you know, one price in euro in Zagreb, another price in zloty in Warsaw, and so on and so forth. But I would see these local stock exchanges mostly as a support to complete the IPO picture, but not a place where you can successfully exit with a large stake even from the locally owned business.
Well, as you know, we have this problem at the pan-European level because many of the stock exchanges in Europe are not liquid, and we have seen consistent discussions over the last couple of years at the level of the EU Commission about integrating capital markets in Europe, but I'm not sure what the outcome of this discussion shall be. But clearly, Europe has to do something, and potentially will be also part of this integrated pan-European capital markets.
Well, I'd be very skeptical about, you know, integrating the stock markets, because who is going, I mean, if we have, I don't know, for argument's sake, one central European stock exchange in Frankfurt, who's going to buy shares of a Romanian, Croatian, or even Polish company in Frankfurt? Nobody. They will not pay attention. So I think we would really benefit from developing these CEE stock exchanges and, yeah, cooperating between different markets. But I think a consolidation of the European stock exchanges can be actually a curse for us, the local issuers.
Yeah, I would like to raise another important topic, which is primarily one of the major hurdles we see here in the Romanian market, although I admit recently there were significant improvements. I'm talking about the fact of fundraising traditionally has been extremely difficult, and this is because of lack of institutional long-term private investors. We have seen today the panel, and we also heard about statistics, which look fantastic for 2024, but we have to say that at, let's say, multi-annual level, we are significantly lagging behind Poland, but both countries are significantly lagging behind the European EU average, which over the last 5 years accounts for 0.7% in terms of GDP, whereas in Romania, to give you an example, it's only 0.023% of GDP, and including also the last year results. So you just announced the final close of your ninth fund. Can you share with us your experience about fundraising in the current geopolitical and economic environment?
The experience was very peculiar because, well, the previous fund we raised in 2017, it took us less than 3 months, and it was one and done, as they call it. The 2006 fund, we raised 650 million euro, it was 3 months, one and done. In the meantime, we had Fund 7 vintage 2013, which took us a year plus. And we started talking to our LPs very late 21 that we might need to raise a new fund because we're short of money. Guess what? February 22, war breaks out. Basically, for 6 months, there was no discussion with the LPs whatsoever. And some of them were actually asking me whether, you know, from the 34th floor of our office, do we see the explosions in Kiev? And I had to explain to them it's about 1,000 kilometers from Kiev, and even though the office is high, I can't see that far. So we basically came to a complete standstill in most of the 22, and then they slowly started coming back. Although back then in 22, the message was, and that's a quote from an LP, he told me, look, from your standpoint, CEE is the brightest part of Europe, but let me tell you, Europe sucks. And that was more or less the recipe for fundraising back then. You are the smartest kid in the otherwise forgotten class. But then finally we made it happen, and luckily we raised 60-something% of the money from commercial investors and only less than 40% from the IFIs. However much I love them, I raised my first fund in '92 with EBRD. So just imagine the scars.
Long endurance.
Yes.
Yeah.
You know, as it was said today during the panel, it'll be difficult to raise funds, particularly new first-time funds, without these IFIs. But watch out, because IFIs come at a price. We did not let 2 of them into our fund because they had excessive expectations in terms of, one of the side letters says 56 points. I mean, we were willing to accept about 50 of these points, but on 4 or 6 of them, we just told them no, and we didn't get the money. So watch out, because some of these IFIs will have really excessive, call it visitation, supervision, inspection rights. And for me, at least, being raised in private equity, which used to be private and you don't expose yourself too much, some of these expectations do reach very far.
Okay. I finally have a last question, because we are running out of time, and of course we could discuss.
I'm running out of time. I need to check out at 1.
Right. So it's time for the final question on my side. Could you recommend something for the, let's say, first-time managers, many of them being here present today, about what is the secret of longevity of a private equity management team? You have done it for 35 years now. I think you're the best one to give some tips for the teams to stay together.
You know, well, there are 2 pieces of advice that I got from our founders. One of them invested in FedEx, or invented FedEx together with their airplane pilot. The other one invested in Apple computers before it went public, and convinced Steve Jobs to take the company public. And these guys gave us 2 very valuable pieces of advice. The one thing that's repeated around the firm all the time, I remember my first investment committee, and I'm presenting the numbers, the EBITDA, the growth, and John is, Jacek, are these our type of guys? And like, yeah, because the numbers, not the Jacek, but are these our type of guys? Do they share the same reasons? Do they view this business as the way we view? Do they share the same set of values, and so on and so forth? And this was sort of a revelation for me, that the partnership is not about the EBITDA growth and the opportunities in different markets, but it's a 5, 7, 10-year alignment of souls between us and the entrepreneur. And the second piece of advice from the other founder was, look, private equity is a very difficult business, and you can't do things on your own. If you try to work in the silo of, this is my company and I'll be dealing with it, and you don't discuss and consult with your partners, you're going to be dead in the water. And this is what we keep pursuing in the firm. Every Tuesday morning we have an investment team meeting, we have followed by a partners meeting, and we talked about the portfolio, the pipeline, and individual portfolio companies or individual companies, and we force people to discuss these things together, because only togetherness will be the only source of advice and direction, and we also agreed with partners that there are 3 ways of, we discuss to inform, we discuss to share information, and we discuss to make decisions. And this teamwork is really a recipe, I think, for a long-term success.
Thank you, Jacek. I think we still have time for one question from the audience, if I may.
If there are brave enough individuals.
Well, yes, please. Second.
Hello, I was wondering if you could give us some estimations on industries that you think are going to be of interest for the investors in the CE in the following period, considering all the context.
Long question. Short question, long answer.
I'm an investor and not a magician, so I don't have the crystal ball to tell you. Well, I mean, for us, for years, the natural development was follow the money, so follow the consumer. We tend to invest a lot in businesses where the consumer makes the final decision to improve his life. So it's not only retail consumer, classic consumer products, it's healthcare, it's education, it's financial services, because at the end of the day, the Joe or the Joan stands there and they decide, I'd like to spend a penny or 100,000 of pennies because this will enhance and improve my life. So I strongly believe in these types of businesses, and sometimes they can be technology driven, sometimes they can be very simple businesses, but I have a tendency, at least myself, and quite a few of my partners, to follow that money and follow that decision making.
Well, thank you so much, Jacek. I'd like to ask the audience to applaud our guest today.
Thank you very much for the inspiring discussion. I would like to invite on the scene the next panel members. Our next panel will have as focus the fundraising experience. We have invited 6 fund managers, representatives, and they will share with us insights on their fundraising process. The panel shall be led by Rudolf Wiesenthal, member of the Board of Directors of Ropea and CEO of Roca Investment. Although we are running a little bit late on our agenda, we hope to have you with us during this panel and also during the following panel of the event.
Hello? Welcome everybody to our panel with fund managers who have recently closed new funds in a very challenging and competitive environment. Today we will not talk only about fundraising. We will go beyond also on investments part. We will understand their strategy, how they are unique, and how they are adapting in a shifting economy, and how the company they are looking for. I'm honored to be joined today by an excellent group of fund managers who have not only closed new funds recently, but also they are shaping the private equity and venture capital in this region. So please welcome Gabriela Chiorian from Morphosis Capital, Dragos Rosca, Bold Mind Capital, Dan Fărcășanu, Mosaic, Dan Mihaescu, Gapmind Ventures, and Cristian Munteanu from Early Games, and also Alexander Dragicevic, am I saying correctly? Thank you, from Mid-Europa Partners. But before going and dive into conversation, I would like to share a snapshot with these funds to understand how vast this panel is. So we are having a truly diverse group, both in terms of fund maturity. Can we have the snapshot, the slide? Thank you very much. And also in terms of investment strategy. You will see that in our panel we have first-time fund managers and also ones who are deploying their fifth a very large spectrum of strategies, from early stage venture capital to growth and buyouts. And also, we are we're going across technology, healthcare services, and consumer sectors. What unites all these funds is all of them earn the trust of institutional investors, and I think this is a very important part for the entire region. So let's step into the question, and I will start our journey with fundraising. And my question is, what were the main factors behind the successful closing of your fund? And I will start with the one who just closed the first fund with the Bold Mind.
Thank you.
Please.
What was behind the success with institutional investors? So actually, in our fund, we have only one institutional investor as a limited partner. They represent about 30% or slightly above 30% of our funding. The rest are private investors. So basically, I think when we applied for funding from the institutional investor, we first tried to understand very well what are we offering to them, what is our value proposition for this institutional investor, because of course they see hundreds of general partners coming to them and asking for money, and we first went through a process of understanding better who we are as a team, what are our strengths. Of course, if there are any weaknesses, we try to evaluate them and to see what is their relevance in the process and see if we can improve on that side as well. But I think the most important thing is about the strengths, because this is where investors are looking when they decide to put the money behind of a general partner.
But when you are at the beginning, it's your first time. How do you know your strength?
Because it's not my first.
Let's keep a very short answer.
Actually, I'm doing investments since 20 years in Romania. It was the first time when I asked for an institutional fund. But we had behind us, we had 20 investments already, and we had 14 successful exits, and we made, I think, we had a very good return on our investments. So these were our strengths, and this was basically our speech when we went there. This was one of the things, and the second, it was about the team, that we were a team of partners that worked together for more than 20 years. And the team was very cohesive, so basically we did not fall apart and during this period, so I think this was another important argument. Thank you.
Let me jump to the other end, to Alex, who just closed the fifth fund of Mid-Europa, and I'm asking if closing the fifth, like copy-paste, or it's also ChatGPT, or is building from scratch?
Well, I mean, we're kind of, I would say it is in a way different and similar at the same time, because we're all witnesses that times today are very different than even a year ago. So how do you go to your LPs and pitch the same thing as you did a year ago? Some things work, a lot of things don't work anymore when you think about interest rates, when you think about sectors. Technology, when you think about valuation, or let's say focusing maybe more on the defensive sectors such as food or healthcare. So what we kind of try to repeat and reinforce with our investors is that we consistently for more than 25 years deliver returns and we deliver distributions. And the second part...
So track record.
Track record, effectively.
This is the most important.
But within the track record, I would say, obviously, returns are the most known thing about, us hitting certain IRRs and money multiples. But
and the teams come second. The team.
No, the themes are quite important.
Quite important.
But what is also important is exiting businesses and distributing money.
Liquidity.
Which is what we see from our investors. That there has been a bit of a lack of distributions over the past couple of years. Hence, sort of many of the fundraisings have moved a bit slower.
Thank you, Alex. Let's go to Gabriela. Morphosis, it's on the second fund. Please share your experience and your...
Yeah, so we are at the second fund. We are now hopefully approaching final closing, hopefully above 120 million euros. We have all three DFIs, thank God.
Congratulations.
Yeah, thank you. I would like to start by saying that at least for us, and I guess this is valid for this part of the region, you need the DFIs to be your anchor investors if you want to build any scale or start a new fund and so on and so forth. So basically that's your core source of financing for any fund, really. So you have to address them, start with the IF, that's our experience. We only had the IF in Fund 1, and then EBRD and IFC, they follow in Fund 2, generally. What made a difference for us, it's hard to say. Probably the most important thing was related to the track record as well. So being able to show the classics, DPI, DVPI, IRR, good IRR on the prior fund. And then I would say, this is so loud, then I would say the consistency of generating returns is what they look for, generally the DFIs or the international investors, and how sort of mature and stable is the team from one fund to another, and the fact that we pretty much have the same team from Fund 1 transitioning into Fund 2 with a few new recruits, which we're really grateful for. But the consistency of the team as well is what makes the difference.
Thank you. Dan, is different in VC?
The industry, it's actually quite different. So you have to have different motivations a bit. You have to understand the industry itself, or you want to diversify, or other investors simply prefer only private equity and treat VC as the Kim Kardashian of the private equity, if you want. So you have to understand that. So in terms of what drove the success, so first fund was 50 million with 22 million from EIF. The second fund, it's 80 million with both EIF and EBRD into it. We are in a very similar kind of situation with other institutional investors and a few other institutional investors to finalize in terms of docs and so on. So this is where we are. Each one of them are looking for slightly different things, but and they presented very well. By the way, today in the previous two previous partners, panels.
In GPs.
Yeah, it was described very well.
LPs,
but I think what they like at the second fund is to see success proven. How you build that success, and super important in the VC world is, can you repeat it? Because in the VC world, it's filled with high successful funds that had on one-time luck, and then 2 generations of funds afterwards, they are just on the median performers, right? So what they did was they looked at us, how we build that success, and if we understand the diversity across the VC ecosystem, because maybe it's a bit too technical, but VC, it's very layered. It's from early stage funds, pre-seed funds, up to Series C, Series D, which are scale-up funds, and they are looking in their mindset at the border of VC and private equity. So if you understand all those, so the LPs were looking, do you understand this? Do you operate like this? Do you take decisions at each level? So in our case, yeah, we have a distributed success over, think it over, we have 6 companies, in the first fund, 50 million, we have 6 companies with enterprise value in excess of 50 million, right? And a couple in excess of 200 million.
So we invested along the way over many rounds. We took decisions. So this was an interesting thing. Like, how do you take decision of to put money into this company at Series A, and not to put in other 3 companies at Series A? So this looked a bit technical, but these are the things that are making the difference, because success has to be repeatable. It's not only a matter of luck.
Then let me take this question and give it to Christian. Can you repeat the success from the first fund to the second?
I hope not. So allow me to be very direct. Fundraising is so fucking hard. Okay?
Tell me about it.
So with Fund 1, I honestly don't know how we managed to make it. As a first-time fund manager, of course, there was a transfer of trust, right, from the EIF towards the fund manager that was selected through a very harsh competition. But looking back, the story of fundraising the first fund was very different from fundraising for the second one. So we started fundraising for the second fund 1 year in advance, and the idea was to have the closing of the second fund the same day when we, on the anniversary day of 5 years of Fund 1, right? So perfectly connected to funds. It took a lot of planning, and yet we still had a 3 months gap between the funds. So for 3 months, we were not actively in the market. Of course, nobody knew that. It was quite a short period of time, but nevertheless, for 3 months, we were not active. With the second fund, you know that saying, size matters, but performance rules. The second fund was quite easy to fundraise, but performance. We are in top 5% VC funds in Europe. Top 5%, not top 10%, okay, in our vintage. Just to give a bit of perspective, in Fund 1, we operate under the objective to return 10 times the fund, 10 times the fund, and we are ahead of our plan. So this is performance, right? Everything else is bullshit. So fundraising when you have numbers is quite easy. Fundraising when you have nothing to show, you are going out there and ask investors to give me 10 million. I don't know what I'm going to make with this money. I don't know from now in which company I'm going to invest, but believe me, it's going to be mind-blowing. Nobody believes you. I perfectly remember 3 years ago, I was on a stage just like this, and I was telling people in the audience that I have at least 2 CEO of unicorn companies in my phone agenda. Nobody believed me.
You still have them?
I have 4 today, and people already started to believe what I'm telling. Yeah.
Good, good. Dan, last but not least, tell me about your main factors behind the successful closing for Mosaic 2.
Yes. So for clarity, we just have one institutional investor in our fund, this being EIF, and we work very well with them throughout the process and also now. Okay, now coming back to the fundraising and the setup of the first fund, I think there were 2 key factors which led to our success. One being the quality of the team and the fact that we worked together in the past, and the team was formed of experienced professional who did the whole investment process from the beginning till exit on several occasions. So this was important for them. And the second important factor is that we identified a niche in the market, being growth investors, okay, growth equity. I think this is underserved, and this was very clear, conveyed and presented, and this is what we want to do, and this was part of our success.
Thank you for saying this, because we are moving from raising capital to how you plan to invest. And my next question, and I would like you to start answering it, what sets your investment strategy apart in today's regional market?
Well, I believe
your secret sauce.
Yeah. It is different. The regional funds generally they go into buyouts, leverage buyouts, and this was their focus, and I think it remains, and it will remain for a long time, and typically for larger tickets. While on our side, we believe that actually in Romania there is a a layer of entrepreneurs. They are seeking capital. Their companies are experiencing double-digit growth, and we are there to serve them. So I think, you know, Romania, of course, you can find succession deals, you can do buyouts, but we are focusing on growing together with the founder, okay? And for this, I think the market is still underserved because there are not too many funds. I'm not saying there are no funds which are providing growth. I think their preference of most of the funds is actually different. It goes into a different direction. Our strategy is on growth and growing together with entrepreneur rather than taking over from the entrepreneur, you know, and then.
Gabriela, I know you are combining growth with buyouts. What is?
No, we only do growth.
Just growth,
yeah,
in this
we only
second.
do growth, yeah.
Okay, so what is your investment strategy different than the others?
I mean, I think it's hard to say it's different. I mean, we are pretty much all generalists in one way or another, but I think, I mean, in our case, in Morphosis' case, probably it relates to the team, and there are two elements there. The fact that we are really a hands-on owner, so when we look at the deal, I mean, besides a number of elements that obviously we take into account when investing, one core element is whether we can add value, like proper value to that founder, that business, and so on and so forth. And we actually tend to move away from deals in which we are just a passive financier or something.
So selection, it's very important.
Selection, yeah. And value add, because we have a lot of sort of operational expertise within the team. So, and we learned in the past 7 or 8 years since we are investing in Fund 1. So we can really truly add value on a number of fronts. And second, which is, I'm not sure it's specific to Morphosis, but it's probably not that common among funds, is that in Morphosis, you don't have the senior team originating deals. We have a sort of a mantra, we should probably put it on a wall in the office. Origination is everyone's job, and we incentivize the team to actually originate. So each and every one of us, we also call it conviction investing, and Andrei would say, you know, bang on the door if you believe in something and just bring it. So that kind of widens the funnel for us a lot in terms of deal inflow. We have stuff to choose from, and that's really, really helpful.
Good. Dan? Your investment strategy, how is different?
Okay. So I think first of all, we are keeping the same strategies in the first fund, which was absolutely proven, and we are in the top performers. I don't want to brag about, because exactly what I said, I don't want to give the flavor that the VC is a Kim Kardashian of private equity. So we are doing well with that strategy. We are super focused on B2B. It proved to be very good and very appropriate for the pipeline that we have here. It's very good for the network, because we have developed a very specialized network of B2B funds that invest with us at the later stages. And there is a very clear track record, by the way, on that, which is a metric in VC. We have a graduation rate of 85%, which means that companies in which we invested are further invested by other VCs later stage. And this is 85% compared to the average in Europe, 34% roughly. This is more than double. And basically it comes with the fact that we help the companies to grow, we add value. I know that it's not, as I said, it's not very uniform across the VC world, but we are rolling out those sleeves. We're helping the companies. We invest in a few rounds together with them. And in some cases, we move towards the exit. We are not exclusively an early stage investors in the sense that we, of course, we are very careful on how we choose our investments. But we are looking at the fact that we need to have this chemistry with them where we can work together on the long term and they share the same vision as we do.
In our case, I think it's quite simple. It's everything about pure talent and my personal charisma.
Good.
right? So,
thank you. It's enough.
Besides this, the problem is venture capital is done in Europe by people from private equity, which is the worst thing possible.
Yeah,
okay?
they understand that
there is
multiple.
no venture in venture capital. So when things are like this, it's quite easy to be successful. You only have to be a pure venture capitalist. And it's difficult to be a pure venture capitalist if you are a GP with a background of a lawyer or a banker, right? So I'm a founder, startup founder. I spend time in Romania building startups, in the US building startups, and probably my approach is a bit different. I don't want to get too deep into that, but it's really easy to be an amazing VC in Europe.
It's easy.
It's super easy.
Super easy. Good for you. Dragos, do you plan to have a different strategy for?
I mean, I think
a differentiation. I mean, on the market.
Yeah, I think that if we look at all the private equities which are active, each of us are doing or looking at more or less same industries, looking at same success factors and so on. But the thing that I think it's differentiate us a bit, or maybe it doesn't differentiate. Maybe there are others who are doing the same. But what is, let's say, my way of doing decisions when I'm looking at an investment is based on the fact that whether I understand or I don't understand that industry or that company. And we are active in small tickets. Small tickets means small companies without a big and developed layer of management. And we know that private equity investments goes over, 5, 6, 7 years. And during these 5, 6, 7 years, many things can happen. And we saw pandemics, we saw financial crises, we saw war, and we will probably see other events
elections
in the future. And when I decide to look in a company like that, I'm thinking, what happens if something like a financial crisis came, or if something wrong happened with my founders or partner there? Do I see myself in the shoes of a manager running that business over the storm or not? And if I see myself able to go there and help the management team to sail through the storm, then I invest in that company. If I don't understand that company, if I don't understand that sector, I don't touch it.
I totally agree with you. Alex, let's go a little bit to the context, because context is more important. And I think because of your ticket size, Romania, it's a very small market. No? It's very difficult to find good opportunities in a local market. How are you looking to Romania? And I heard in the previous panel that is Romania the next logical step for a fund like yours?
Well, look, I mean, we are predominantly focused on Central and Eastern Europe, and Poland being the largest market, Romania following, at least in terms of the size of the country. We've been, I would say, quite happy with the investments that we made, such as Profi, Regina Maria, which are not something that happens every year, and we acknowledge and appreciate that. But we see, we operate at all ranges, between sort of 100 million enterprise value all the way up to 500 plus. So we see in the mid-range, a good pipeline of companies. And what we see in Romania specifically is the sort of emergence of new GPs, which are kind of helping build this pipeline, doing the consolidation of various sectors, or kind of pushing various themes which align with ours, which was not the case, even if you look at it 3, 4, 5 years ago. So we, people ask us, are we exiting Romania given the 2 exits? But the answer is most definitely not, because this is the place we see big potential. We have an office in Bucharest, and we are, in discussions with certain companies, which we hope will, manage to sign and close in the near future.
Anybody would like to add on this question regarding the context? Is the context changed since you closed the fund and you have to invest now, or all the time we are thinking long term and you are taking in consideration these kind of changes?
Oh, okay, so
I'm inviting you to answer.
I'll take the question. Well, to be honest, I was very scared, personally and professionally, in the last quarter of 24, okay, to invest, and this kind of continued.
2 weeks ago, not?
A bit, yes. Okay. But in the end, I think we took the best candidate out of the 4, which also it's a bit unusual to have 4 candidates. Anyway, I think if you trust Romania in the long term, then it is worth making investments here. This is our mantra. But again, for us, the key question is the founder and working with the founder. Okay, so this is what we want to do.
So it's more important than the context.
It's more important than the context. Of course, we have some industries we do not invest. We have some. But essentially, it's always about the founder, because we are the type of fund which very much supports the founder, does not take over from the founder, okay? So for us, it's essential that the founder wants to scale up, not just to cash out and, go and live in the States. And we are there to help him with the scaling up. This is what we do.
Okay, anybody else to answer this question, how a private equity manager looks to the current context? Regional, not only locally?
Yeah, in venture capital at the early stage, it doesn't really matter, because the cycles are so long. Companies need years to grow and to provide value to the market, so it actually doesn't matter. And Google, for example, was founded in 2000, right? The year of the big bubble, the dot-com bubble. What's more important is the context 5 to 10 years from the moment you invest. So, for example, I'm very interested in the future, what I see as the future crisis of the labor market. It's going to be a huge shift in the labor market 5 years from now because of AI. So I'm looking to invest into that today. So for me, it's more important the context in the next 5 years than what's happening today. It doesn't matter what's happening today.
So you mean that AI will replace a lot of jobs, and it will be a crisis in the labor market? This is what you mean?
Yeah, and many kids that are doing today, they are in the college today, hoping that they will make a wage working in front of a computer. They will be the next, manual laborers.
Okay, so let me go to the next question, and I would like everybody to answer this. How the ideal company looks like? So what is the target company that you would like to invest in this context, in this moment, in this region? And I expect totally different answers, sure, because you are totally different funds.
So the ideal company is a company that makes no money. If they are making 10 million, we are already too late, right? I think that anybody can see a good company when they are making money. In my opinion, if you are good, you see it before everybody else. Secondly, it's a company that nobody really gets what they do. When we invested, we were the first investor in Druid. In 2019, we invested at a valuation of 4.5 million. The company raised 305 million this year. Right, so 66 times the valuation at the moment we invested. That's VC. Everybody said, well, but that's just another chatbot company. They were not. We invested in Bible Chat at a valuation of 5 million. They raised, I cannot disclose, but it's super high valuation. And they raised in February this year. Once again, 50 plus the valuation. Everybody said, this is stupid, why do you invest? Because it looks stupid. This is why we invest. And I said this several times, so I will repeat it here. In venture capital, it's important to be right, but it's more important for everybody else to be wrong.
I'm sure you cannot apply this recipe in buyout.
Sure.
I think you can apply in buyout as well. I mean, I had an example in the past.
a company that actually no one wanted to buy. I bought it 6 years ago. And in the meantime, I made 44 times my investment. So it happens. It's how you understand the industry is that if you have the operational know-how and you have the networks and you have the access to the right people to bring in, and if you understand what are the areas to push and what are the areas to draw, so that to make the things move into the right direction, then I think you can multiply a lot of investment that other people don't see it or don't trust it.
How the ideal company looks for you?
For me, the ideal company is that the one that had a lot of knowledge and competence inside, but which is poorly managed. Because management you can change, and you can do it.
So your differentiation is that you are changing the management?
Not always, not always. We can also buy sometimes companies which are very good and have the right management, but typically those companies are very expensive, and your returns, you cannot make huge returns on that. Because there everyone sees it and everyone bids on it, you know.
Thank you.
Thank you.
It's amazing actually how different how different VC and PE is, because we definitely want to invest in companies that are making money, okay? But I think it's very similar. The ideal company, again, comes from the founder, and is very similar to what a gentleman from Enterprise Investor says, that we actually want to have a guy which thinks the way we think, and then we can do business with him.
Okay, Gabriela?
Yeah, that's my answer as well. It's a marriage, pretty much. We always do founder transition deals, so we keep the founders in the business. And what we, sort of our experience in the last 7 to 8 years has been that a person can actually make or break a deal, long term, really. So it's really chemistry with the founder, its vision, his vision.
Values.
Values, yeah. You pretty much, I mean, you need to test that one way or another when you, and upon entry, which is not like 100% accurate. Time will test it in the end in the deal. But if you have chemistry and you can actually liaise with the person, you will go through really bad times as well. And those are coming in each deal, definitely.
Thank you. Dan?
Yeah, well, it might surprise you, but the VC is not so homogeneous in their views. It's not about us in the panel, it's also in the entire industry. So at least in our case, the more important factor is the team that is absolutely good, not only a creativity part, not only a technology, but also on leadership. It's a subject not discussed in VC, actually, and I'm not sure why, but it's not. In these changing times, leadership becomes more important than ever. The capability to go fast to the level where you can sell your product, it's absolutely important. And when we look at startup, we are looking if they do have those ingredients, because the technology, it's only a tool. And by the way, this is the interesting part. These tools are evolving faster than ever before. So what does it make? Well, somebody crazy enough to do these things at an early stage, having the leadership capabilities, having the capabilities to, put people around them, but also to sell. But also, this somebody being able to lead not only a small project and a small business, but being able to lead a large company in a matter of 3 years. The acceleration cycles of that leadership team, it's supposed to, in the VC world, if they are successful, are amazing. The pressures are amazing, right? So basically in 3 years, they evolve from basically 1 million ARR to 20 million ARR. And guess what? When they are 50 million ARR, they might be unicorns, right? So the pressure that they need to be able to take on, the international mindset that they need to take on, and building a company It's so very different than building a smaller company or on building a local company, right? Other than that, of course, every team has to have their own ingredient of genius, creativity, charisma, and all those good things.
No discipline.
Sorry?
No discipline on your list.
Oh, well, actually, they always need somebody in their team to be quite disciplined, because guess what? When you're a startup, okay, maybe some things cannot be, but over there, when you're raising rounds after rounds that are 50 million, 60 million, and all that, like you've probably seen in the media, well, you need to bridge the both worlds, right? Of a mature world, of a mature company, and also keeping alive the culture of a startup.
Please.
Just one comment on the distinction between PE and VC as asset classes, because 10 years ago, practically no one knew what a startup was, right? It was something so new. Nowadays, it's already an industry. And this trend is going to continue. And if the evolution of the capital market will follow the one in the US, in the next 5 to 10 years, we'll see a shift, right, in this balance between private equity and VC. And in 5 to 10 years, Ropea won't be the association of PE and VC, but the other way around, will be the association of VC and PE. 10 years from now, the VC funds will manage $500 million assets under management. They will invest everywhere in Europe. We'll already have, I don't know, 15 unicorns started here. So in my opinion, this entire industry is changing.
Alexander, do you agree? Two questions.
Well, it's a tricky question.
Yes or not?
But not entirely. But I would just add we kind of take a slightly different view because for us at this level and in these markets, sort of the things that we are chasing probably everybody sees. So for us, the tricky part for us is trying to be differentiated and seeing what we can offer to the companies that have already made it. They're already number one in a country, or they're sort of in the top three. And this is where we kind of try to offer, consolidation, M&A capabilities, or maybe international expansion. But as going back to your original question, as a rule, we quite like market leaders, and we like cash generative companies. And we see that being more and more relevant in current environment.
Market leaders and cash generation, please.
And this is actually one big difference between growth and buyout, because we want to build companies that become national champions, and then we sell it to Media Europa.
Yeah. This is we are complementary on the market, so that's why this panel is so valuable. So I would like to go to the audience and to ask if you have any question. It's a really opportunity to have all these experienced managers in one place in one time, and I would use this opportunity if you have some questions. Please. For who is this question? Okay, who would like to answer? Evaluation of the team.
We rarely have this problem in the investment sizes we go for. Generally, there's very, very slim management team in place, and we have to hire, really. So that's, when we're talking about the 100-day plan, that's one of the elements of the 100-day plan. You need a CFO, you need a CEO, so you basically, in most instances, you start from scratch. So maybe in buyouts would be different.
Please.
I would say definitely the question that always is, raised in our investment committee when we talk about a business plan is who is delivering it. And, I would say often if there isn't a clear answer to that question, the company can be a market leader and cash generative. Our investment committee will say, well, come back when you have that person or that team. So it's extremely important for us, especially in these markets, because, if you just take a quick example of Profi, where the company over the past 10 years has grown so much and has gone from a small retailer in a part of Romania where that same team largely was managing 100 stores, 200 stores, to when we exiting managing 1,800 stores. So that took a lot of sort of human resource and talent management perspective to see at every stage, is this the right management? Can they handle it? Do they need fresh blood because they're so used to working together?
I would recommend a book here, What Got You Here, What Bring You There. It's very important, and most of the time it's applying to these kind of high growth companies.
Thank you.
Any other question? Or thank you everybody for this opportunity. And
For our next panel discussion, I would like to invite on the scene Andrei Gemeneanu, the managing partner of Morphosis Capital, Mr. Igor Cicak, founder Provectus Capital Partners, fund management team set up in Croatia, and Mr. Cristian Buc, the president of Allianz Pension Fund operating in Croatia. The panel members will share private equity and pension funds collaboration insights.
Our panel is sitting between us and lunch. Indeed, I need to lower. I have a high voice on my own, so I'll try to behave with this. Indeed, but I will try to cut into my own intro to make sure that we fully protect your time. Listen, I think just as context, frankly, very often in these forums of Ropea, or as Christy suggested, I don't know how the letters would work out if we call it the Venture Capital and Private Equity Association, but if you come up with something, Christy, we will consider it. We discuss about the importance of pension funds in the ecosystem. I mean, if we look at the global level, pension funds are a critical investors. We see allocations of up to 25% of their assets under management. We see pension funds in developed geographies representing between 17 and 28%, I have seen, of the private equity capital. So whichever way we look at the numbers, pension funds are critical. And I think usually we are staying in our own bubble of private equity fund managers preaching about this. But I think today we have the opportunity to speak to the two of you about a true success story about the ecosystem in Croatia and the way the combination of pension fund capital deployed into private equity funds has unleashed significant performance and a very, very strong impact on the track record. I'm here joined, so just as brief introduction, Igor Chichak is the founder and managing partner of Provectus Capital, one of the, or probably the most active fund manager in Adria. And we have the pleasure of having with us Christian Buc, who very kindly agreed to travel to Bucharest, especially for this event. He is the chairman of the board for Allianz Pension Funds Croatia. So thank you very much, gentlemen. I think, again, looking at the Romanian environment, we have Pillar 2 of the Romanian pension system with around 30 billion euros in capital, and we have Pillar 3 with around 1.1 billion. As the Romanian Private Equity and Venture Capital Association, we have recently saluted a new government decision, very, very recent, probably less than 2 months ago, in which up to 10% of Pillar 3 can be allocated to private equity. But frankly, we know, and it was important to hear it today acknowledged by the government authorities as well, that unless a certain allocation from Pillar 2, where the bulk of the money is, frankly, the initiative will fail to achieve its intended objectives, and it will not really be the case that pension funds will achieve critical mass for private equity allocations. So without any further ado, Igor, if I can start with you, if you could kindly give the audience and all of us an idea with some key facts about the private equity ecosystem in Croatia, and in a way, the journey you've been on.
Thank you, Andrei. In Croatia, actually, we had, I would say, two waves in that early development. So the first development started some 15 years ago when the Croatian government decided to support development of the industry and has created a program in which government invested 50% and fund managers had to obtain another 50% of private money to get the fund established. But that was a tremendous failure. That was complete disaster 15 years ago because conceptually it was simply wrong. GP was not required to invest, so there were no alignment of interest. Also, government made some, I would say, how to say, and to remain politically correct, strange decision. First they said, okay, you can charge management fee based on capital committed, but then they changed it and said you can charge management fee only based on capital deployed, and then everyone deployed because they were not also deploying their own money. So it was a complete disaster, and I think recovery was maybe on 100 euro, maybe 1 or 2 euros. So that was really bad. And because of that, for 10 years, it happened nothing, actually. It was impossible to raise the fund. And then, luckily, and thanks to EIF, I have to say, we had, in 2018, EIF started the program of re-establishing private equity industry in Croatia, providing up to 50% for the fund, first-time funds, and that has somehow reinitiated process again. And for us, when we've been in fundraising, the most difficult was to explain what is different with us compared to the first founders or fund managers. So that was how it started, but then luckily, it was successful. I would say it was a successful program with EIF. They were raised 3 funds. One of them, it was us. We've been the biggest fund. And since then, it happened many positive things. So funds were deploying, I would say, successfully. So you can see an impact on economy, impact of investments. I can just say, for instance, for our fund that we have created 25% new jobs in companies that we have invested. We also increased salaries. We did a lot of capex, although we are buyout fund, but we did some capex as well. And actually, all of that has created a very positive atmosphere. The government also recognized that, and regulator, and then regulation changed. And now we have situation that in 2020 we had, I mean, Croatian economies, Croatia is 5 times smaller than Romania. I think economy is kind of equal or slightly better, but it's, let's say, equal. But in 2020, it was more than 200 million raised for those funds, and now in 2025 we are few funds are in five fund raising. I think it will be another 300 million. So if you just compare with Romania, which is 5 times bigger, and it's actually the same amount of the money that is raised, so it's speaking about how the industry developed, and also, you know, what is the impact on economy? There is I believe, a very important impact. Economy is going well. Croatia really progressed a lot. It's A-rated country today. So, so we have now really good atmosphere, and I think it will further. And you know, there are few fund managers that are established and now coming to Romania, because also see a lot of opportunities here. So I think the dynamic and the story, it's going in right direction. Yeah.
Right. I think the success of Croatia is quite phenomenal. I had the pleasure of having dinner with Igor and Christian last night, and I realized that being for the last 10 years in Romania, I didn't know the word in English for the opposite of budget, deficit, but Croatia managed for a couple of years to have enough resources and actually finish the year on a plus, something that I think we definitely have something to learn as the Romanian economy there. Christian, I want to turn to you. Obviously, you're in your current role at Allianz Pension, but your career has always been, from what I understand, in asset management, insurance, regulatory engagement. Can I ask you, was there a turning point, or what was the chronology? If you look at the market and the development of these allocations from pension funds into private equity, how did it happen? How did you get to the success story that certainly Croatia represents today in many respects, but also in this particular area?
Hello to everyone. Andrea always said, thank you for coming, thank you for joining, but it's really a pleasure, because I heard a lot of common things to Croatia and some opposite things to Croatia. When we speak about Croatia Pension Fund, the size, I just a short intro that people understand what we are speaking about. The size of the Croatia Pension Fund second pillar, it's 24-25 billion euros at the moment. 2002, and after 23 years, I would say that the system is already mature. So this is point number one. Point number two was in 2010, what Igor explained, that we have a huge failure, and then we stopped and see what to do. Point number three was 2014, when we, together with our regulatory agency and a ministry, and I have to say that in Croatia, pension fund, it's under the Ministry of Labor and Pension System, not the Ministry of Finance. We create something what we call sub-funds. So we create fund A, B, C, and which every of this fund have a different investment strategy. So A fund is the most aggressive fund. B fund, it's it's a balanced fund, and fund C, it's conservative fund. So the intention of this is that, except that the strategy of investment is different, the limits by the law are different, that the people have a possibility to choose depending on the life cycle of itself, where they will move. So this is point number two, which is very, in my opinion, very important. And point number three is when we got from the government a limit because of maturity of the fund, because of funds, sorry, because of the maturity, because of the life cycle of the pension reform in Croatia. When we got the limit to the private equity in the biggest fund of 15%. This is a lot, but we have to have in mind that together with the private equity inside we have a real estate as a part of this limit, and the position which are not liquid for us, or where we have completely control of the companies. Then what Igor said, it came to AIF, ABRD with all the offers what they gave, and then we start to develop the market. We start to create a portfolio. Concerning the portfolio, at the moment only my fund have 260 million committed money.
Private equity and venture capital commitment.
Just
Wow.
private equity, yes.
Wow.
From this, it's about 3% of our assets under management. So we are a little bit more than 9 billion. And already it's 1.8% invested. But I have to say, since the Croatian market is very shallow, only 12% of this money is invested in private equity in Croatia, because there was not possible to put more. But the Croatian private equity funds are much more successful. When we speak about invested money, it's already on 17% compared to the others. And just a curiosity-wise, at the moment, only my fund till the end of the year, we have most probably 150 million euro additional money ready or already engaged or promised to the private equities. Half of this is Croatian.
We all envy Igor from here in Romania. We feel that his fundraising life is too easy, with so much capital available. I'm sure it's not. The grass always looks greener on the other side. But Christian, if I can stay with you for another moment, obviously you allocate very significant capital, so 260 million euros. Can I ask you, how do you make the decisions? How do you make the choices? Give us a sense of how also you as an organization build this capability for making these capital allocations and evaluating GPs.
First of all, we established a clear and dedicated team and the process for the private equity. So I have, let's say, 5% of my FTE dedicated only to the private equity, because it's necessary from the front office, from the risk department, from the compliance and the legal. When we start and when we think about how we'll start, of course, it's logically the step is that you go abroad and that you pick up one of the biggest or one of the big with the track records, with a clear past and everything. This was our first move. Then when we learn also something about how to estimate a private equity fund, then we go back to the locals and we create a set of criteria which each private equity fund and the founders have to fulfill, and we are very, very strict about it. You said that it's very easy to get the money. Believe me, 60% of the asking got the money. Yeah. No, 40 it's rejected,
and 60
it's okay. And then you know, Croatia is a small market. Integrity of the founder, it's one crucial thing. I cannot say if Igor is successful in private equity when he first time came in my office, but I know Igor for years, and I know that he have a brilliant integrity and track records and everything, and this is a huge point, especially in the small market.
Absolutely. I think we've talked during the day about the importance of reputation and trust. I think it obviously applies to the DFIs, applies to everything when it comes to private equity.
But just one additional point. When the regulator gave us a limit for the private equity, they also set up a framework which we have to obey. So every investment or every private equity, every founder must be estimated by us. So we can look for the AIF estimation, but we have to do our own.
So you have to run your own due
Absolutely,
diligence.
Absolutely.
Right.
That's the reason why it's taking so long. Yeah.
Igor, can I turn to you now, and can you give us a sense? Let's assume that we fast forward from now. I don't know, hopefully not a very long period of time, and the regulatory environment in Romania will improve, and the local or regional fund managers will be able to go and try to raise capital from pension funds. From your own journey, if you look at pension funds in the context of other LPs, institutional or otherwise, that you discuss with, what do you feel is similar? What do you feel is different? What advice would you have for this community, as in the future, hopefully, we will go and try to raise capital from the local pension funds?
Well, I think there are actually many similarities. Pension funds are like other LPs, institutional investors. So the most important is that there is a transparent process, transparent relationship. Whatever you are providing, that it's well prepared. I mean, everyone is looking for track record. So for the first-time fund, they need to find some angle to prove the track record in the previous, business life, doing some value creation, some investment, some deals with no private equity structure. So, you need to find a way how to convince the institutional investor that actually you have track record in order to set up the first fund. For the established funds, they look for performance, absolutely. This is very important, but also integrity. And, these are small markets. There are not many players, also in Romania. So people are watching how you are doing, people are talking, founders are talking, did you stick to what you agreed? And that's really important. How the fund manager is working and creating value. What is the value creation process? Also, it's important. Not always goes as it is planned. So very rarely goes as it is planned. So that there are always difficult situations, and this is important. How you handle difficult situation. It's easy, to point the finger into someone and say you are guilty, or to fire someone. So I think this is also very important, and it's important to determine that even if it is not, when it's not going according to plan, then you still are as well committed as to deals that are producing very nice returns. So I think this is all important, and also if you have three superb investments and 2 bad investments, I think this is also maybe not the best for pension funds. So maybe to show a kind of
balanced portfolio
and approach to. So that all matters, I would say.
Risk-reward metrics, what we create internally, it's very important for us also, because we as a pension fund does not want too many risk in our portfolio, even if the yields, returns are bigger. We are on the long term, so sometimes we pick a lower returns with a lower risk, of course. It's very rarely that we take a huge risk in our portfolio. Very, very. Doesn't matter of the size.
And can I ask you, Christian, if we stay with this for another moment, how do you reconcile or how do you align the need of a pension fund to have long-term stable pools of capital with the inherent risk of private equity and venture capital investment. And what was the narrative that worked with pension funds in Croatia?
But look, I have to say that the average yield on our funds, not Allianz, but overall our index, so altogether, in Fund A it's 7.9% 6 exception, Fund B 5.5% 6 exception, for Fund C 3.4 since exception. To keep this very high yield, you will agree with me that this is, for the pension fund, it's very good. To keep these yields in this phase of the pension reform, you have to create some more risk in portfolio. So we choose that we go abroad with equity more than before, because before most of the portfolio was state bonds, not only Croatian, but I said to you yesterday, we also have some Romanian. But then we have to create a little bit more risk to get rewards, of course. Right. So the private equity, real estate came into the mathematics.
Right.
So when I said that we invest 3% of our assets under management till now, with this new investment till the year end, it will be 4%. It's a huge amount of money, but in total portfolio, it's not so big.
And can I ask you, Christian, if I stay with you just for another second, there have been voices in Romania, I personally call them populist voices, that have said things like, we cannot put the poor Romanian pensioners' money in the hands of risky managers in private equity and venture capital. From your experience as a successful, obviously, pension fund senior leader in Croatia, what would you say to those voices? And what can we ourselves here in Romania say to those voices?
I think that you all have to work together. So first of all, if some private equity lose the money, doesn't matter of the size, the first who will be crucified will be pension fund manager. With all the headlines, what they are doing without pension, they are losing our money. So they do not look the whole portfolio, they just look one single thing, and they are very mean, gritty, whatever you can call them. So this is a problem. When we discuss with Igor and his colleagues from the other pension fund, we clearly said that we expect that the first investment have to be successful. Of course, nobody can guarantee this, but it's crucial that the first few investments be a success story. And then after it, you always have, you can always tell to the people, to the politician, to the newspaper guys, look, okay, it's happened. Nobody have a crystal ball. You cannot predict what will happen. But look back. First 3 or first 2 investments are very good, and that's the reason why we go abroad. Because nobody can accuse us that we do something with the pension money. We invest in the huge worldwide private equity funds, and the same thing. It's when we start to discuss with Igor and his colleague from the other funds.
Igor, any perspective from you? What do we say to the disbelievers?
Well, I think it's a process. It's a process, and you need to be persistent. I think we went through that in Croatia, and now situation and atmosphere is much better. People understand these are long-term investments. You don't judge based on one individual deal. You need to wait for for a longer period to analyze returns, and I think this has changed really in the right direction. And you just need to be persistent. It's important to work with regulator, with the government. I mean, it's obvious that if you compare private equity returns last 40, 50 years since the industry started, in average buyout funds, and we are buyout funds, in average, but also other funds, you know, they overperformed index, they overperformed stock market. So I mean, there is a clear evidence that it's a meaningful business. That there are reasons for private equity to exist, and there are reasons for pension funds to invest, because if you want to preserve, you can't just investing into bonds or I don't know, liquid. So I think, you know, everything is speaking in favor, but you know, you just need to be patient, and I think to what you are doing at Ropea and this conference, and generally, I think Romania is really doing positive, and there are so many good things has happened, and perspective is excellent, I would say. So there are no, you know, there are no
no miracles.
magic formula. But I think you are on the right track, and I'm sure it will come in Romania also, especially now, you know, you are being successful, other fund managers are showing good results. So that will help, you know, to speed up the whole thing.
And, and especially on the beginning, but even later on, I think it's crucial that you have a constant communication. So, okay, there is a first investment target. Okay, Christian, look, I will do this and this. This is my goal. Be relaxed. It's not too risky. It's in the line with the prospectus on the fund, in the line what we are speaking about after the investment. Each quarter, it does not have to be me. I have a people inside the company. Look, everything going good. That we are also relaxed. And then when you have open and honest communication, it's much more easier. Even if something going in the wrong direction, look, I made a mistake here, I will try to correct it. But this constant communication for us as a pension fund managers, it's crucial that we are knowing that somebody there taking care about our money, not only but our money and our money of our future pensioners, and that's it.
Well, and obviously when there's pension money on the line, I think the public visibility and the risks associated with that are higher. So I think the stakes are definitely higher. I want in a moment to give the chance to the room if they want to ask any question. But maybe, Christian, before I do that,
there was already one, I think.
Okay. Well, let's take that first, and then we will close soon after that. We can hear you okay, Dragos.
It's good thing. The question is in fact good, because this I forgot to say. Every due diligence doesn't matter if it's private equity or if it's IPO or whatever. We have possibility to charge the fund, not the company. So it's much more easier for us than. Of course, we have to prove each of these costs to the regulatory agency, but they allow us to charge this to the fund. When I say 5%, it's one person in front office, one person in risk department, one compliance legal, my colleague board member for the investment, and when I said the fifth one, this is most often outside law office, so I count it as one head count from them. This is the thing, because the normal material what we prepare for ourselves, for our regulatory agency, consists 80 to 100 pages. So you have to be prepared. And due diligence room, it's visited by 2 or 3 people all the time. But the cost-wise, they're booked on the fund.
Okay. Please, Mogor.
Look, from the regulatory side, it's very clean. If you did your homework good in the beginning with the investment, then everything is okay. Our role in any investment, it's not anything else but the finance investment. So we are forcing corporate governance, meaning we are the General Assembly. Supervisory board have their own duties, management board have their own duties. It was very rarely happened that somebody put the finger on us from the newspaper or politics or anybody else to blame us that the management board did something wrong. Of course, our duty is that we provoke the change of the management board. Before maybe 2012, it was this kind of situation. Now it's regulated, it's very clean, and I do not feel it. But if somebody would like to be mean, they will always pull out something from the past, even if it's 10 years old.
Okay, so listen, Christian, final question for you. I mean, we're obviously here on a journey. I take the fact that Mugur is still here and asking questions as an indication that there is interest, and that's encouraging. From your perspective, if you were to give any advice to the Ropea community and the ecosystem here in Romania about maybe 3 steps or 3 actions that we should take in creating this opportunity and opening up this market, as well as how should we go about it between private equity fund managers, pension fund managers, regulators, anything from the way this was collectively achieved in Croatia that you feel you would like to pass as a learning to the community over here?
Far as I understood your communication here before, the results of the private equity fund and venture capital funds in Romania are quite good. Yeah, this is point number 1. With this point number 1, you should approach the pension fund community and said, okay, look our results. You are also mature pension system. Our results are good. We rarely lose the money. Let's go together to the regulatory agency and to the minister. Minister and people in the ministries are changing, but the regulatory agency people, especially not the first guy, but the guys below, are constantly there. So they will understand what you're speaking about. So first, proving that you have a great success story with the results. Second, that the pension funds are interesting, that you jointly go to the regulatory agency, and in my opinion, start with a smaller capacity. So if somebody give you 3 to 5%, it's already a huge move. Do not ask 15% because this is a long way to 15%. Even if you get 10 or 50%, my belief is that not a single pension fund would invest this kind of money in private equity.
No, okay. So being pragmatic about it and starting the journey is much more important. Igor.
If you have 30 billion, you get 3%.
3%.
So
that will
it's
make a very
almost
material.
bit,
Yeah. Igor, final word from you, and I have to tell you, you're the last speaker of the event altogether. So, as a successful Adria investor, but now very recently opened an office here in Bucharest, so you obviously believe in the potential of this market. Give us something to lift a hungry audience.
Well, I'm a truly believer in success of Romania, I have to say, and I see Romania as Poland for Southeastern Europe. Yeah, so just keep going like that. And I mean, Christian said many things, but I would maybe just repeat what colleague from IFC said. You know, don't give up. Don't give up. Just continue. Be persistent, and you will make it. And I think the sector will grow.
Brilliant, gentlemen. Thank you so much for traveling to be with us today. Thank you.